but they will affect Wall Street, only widening that gap between asset prices and the main economy.
I have to say the timing of this Jackson Hole speech, I think, is fortunate, incredibly lucky. The evolution of the data has been quite favorable in their favor. The fact that inflation has continued to show some progress, some disinflationary trends progressing on top of that. Unemployment started to climb, but not too much. I think you can make the case, without coming out of left field, you can make the case at Jackson Hole this week that it's time to think about risk mitigation, risk management, the evolving balance of risks, and for that you need to reduce and take away some restrictiveness. It's quite an obvious message they need to send this week, isn't it?
And it's a message that's been pretty directly telegraphed by a host of different Fed officials who've been speaking over the weekend, who've been speaking over the past couple of weeks. Question now is, will that be enough? Given the fact that markets tend to take an idea and run away with it. And they have run away with the idea of a 50 basis point rate cut next week. What is the threshold for that? I don't think Jay Powell is going to come out and saying this is the balance of risks that we're going to go for 50 basis points, but this is what people would like him to say. And then in terms of how steep they can go, in terms of the neutral rate, I think is also an interesting idea, with Stephen Englander talking about dropping the rate, the real interest rate to negative potentially in the face of some sort of economic stress.
Projecting confidence has got to be an objective of the FOMC a little bit later this week. That's an objective of the DNC this week on the economy as well. And I have to say, just take a step back. Over the last week, they've struggled to project confidence around what they want to do with the U.S. economy.
Absolutely, because they're coming out with this economic plan, and what everyone is focused on is this idea of price gouging, which Kamala Harris tried to herself clean up on Friday, saying all she wants to do is encourage Congress to basically say to the FTC there's a federal ban on price gouging when it comes to grocers. Because the issue is this has had serious pushback from economists who are even close to the Democratic Party. I look at what Jason Furman said, basically hoping that this isn't really an idea. The good case is price gouging is a message, not a reality. That's from your own camp. So they need to come out and say, we heard what you had to say. This is what really we're trying to do, because a lot of this is just thin on details. And Governor Gretchen Whitmer said, don't read too much into the price gouging. The issue is then, you look at what the Washington Post said, why put it out there if already you're being attacked, that your policies are communist in nature from the Republicans, that's what they're saying, then why talk about things like price controls?
Well, to me, this also just raises the issue of what do we actually know about what the policies are.
Not much.
Exactly. And so, if we're talking about the fact that no one's taking it seriously, what are people taking seriously? It's the deficit. And that's, I think, what we're going to see in terms of volatility in markets.
There's a pivot. There's a pivot. Let's just stay on this for a further beat. I think design and implementation is really important. And we also have to acknowledge that, to some extent, this legislation already exists, particularly at the state level, and it can be very effective. So let's take the baby infant formula story, right? You have a big shortage in this country. In New York, we saw some retailers increase prices, jack prices up, and there's space for the state to step in and say you shouldn't be doing that. Okay, one. Design and implementation is going to be so important here, and without any real detail on what the design will be and what the implementation would look like, you've got no idea what the outcomes would be. So the outcomes could go anywhere from nothing to Soviet-style shortages and the like, and people lining up in food lines. These are the outcomes, and this is the problem of when you come out with a poorly informed decision just to throw out a line without any detail on design and implementation. And that's exactly what's happened with the Harris campaign over the last week.
If you take it a step further, there's a real question about how you become the party that allows business to thrive, and the concept of being competitive in the United States, which is something that she put out there. How do you give that image if you're also talking about attacking profit margins, essentially, right? Is that what this is actually going after? What is the difference between profit margins and price gouging? Is there some sort of line that you can really identify? Are there parameters? These are some of the things that I think would be important to define whether this is anti-business or whether this is looking for specific policy prescriptions in cases that fall outside of the laws that already exist.
I spent a lot of time on the phone talking to individuals close to Kamala Harris when it comes to the economic policies. And they've asked me, Anne-Marie, what companies are calling you and telling you they're so worried about this? And I said, well, hold on. What companies do you think right now are price gouging? Because it was only a few months ago when this White House was touting that all of these companies, Walgreens, Walmart, Target, were cutting prices and listening to them, and that inflation and their policies were working. Inflation was coming down. Prices were working. This is an upbeat for the consumer. And you know what? They couldn't answer. This comes down to this polls well. And Kamala Harris is an incumbent. She is part of Bidenomics, whether she likes it or not. So instead of placing the blame on themselves, which the poll voters do, she's trying to put it on corporate America.
Don't you think it also reveals something about instinct here, Lisa? Instinct, statist intervention is the instinct of this ticket. It's hard to distance yourself from that when ultimately this is something you've thrown out in the last week. Think about it. There's nothing out there on policy. For a long time, we've talked about a campaign website that doesn't even have a tab to click on policy. There's nothing out there at all. And then you throw out something like this. That tells you a lot about where your instinct is.
Will they walk it back at all in the DNC? Will they be actually asked to by the ongoing party? It's a good question. And honestly, it's worth pointing out and talking about just simply because there is an absence of much else.
Let's turn to the scores. Equities right now on the S&P 500, totally unchanged, going nowhere in stocks. In bonds, going nowhere too, particularly over the last week at the front end of the curve. The 2-year still in and around 4.05%. The 10-year at 387.30. In FX, I just want to bring up dollar yen for you. Equities look calm. Dollar yen's delivering quite a move this morning. 0.9%. Lisa, 146.28 on dollar yen.
Yeah, as people wait for some sort of explanation of how much further the Japanese officials can go. How much, though, is this basically an acknowledgement that the yen can strengthen without the world falling apart? That essentially you have hedge funds that are going long the yen for the first time in a very long time after chronically shorting it and actually building up leverage positions. That's what this indicates to me, because the world is not falling apart, and yet we do see yen strength.
This is not what this story was just a couple of weeks ago in foreign exchange and in equity markets. Your lineup this morning for the next hour or so looks like this. Coming up, we'll catch up with Matt Orton of Raymond James with the S&P 500 on a 7-day winning streak. Bloomberg's Bobby Ghosh as beef talks stall in the Middle East, and Kelsey Barrow of JP Morgan Asset Management ahead of that speech from Chairman Powell in Jackson Hole. We begin with our top story. Stocks coming off their best week of the year as traders await Fed Chair Jay Powell's remarks on Friday. Matt Orton of Raymond James writing this: I expect Powell to more explicitly set the table for the start of the rate cutting cycle in September. This is consensus now, and the key question is, by how much will they cut? My base case is 25 basis points. For more, Matt joins us now. Matt, let's talk about your theory on where we are at the moment. Slowing but not breaking. Is that sufficient for equity markets to continue grinding higher from here into year end?
Hey, good morning, John. And I think it is. I think the fact that we're starting to get normalization on the inflation front, that growth is starting to come back down to what we more expected it to be, but still be positive. I think that's generally very positive for the equity markets, because you can start to expect a rate cut. You can start to read through of how gradual this might be. And most importantly, it gives you more visibility with respect to corporate earnings. We just haven't been talking enough about how resilient corporate earnings have been through all of the volatility, with different narratives, with what's happening to the consumer, global growth. Corporate America has done very well. And what is most encouraging to me as an investor is that I'm seeing the broadening of earnings growth that has been playing out over the past 2 quarters continue so far in the second quarter, and you're finally starting to see that translate a little bit into price breadth as well. So you're seeing more sectors start to work despite the big events over the past couple of weeks, and that gives me encouragement when I talk to clients to say, look, I think when you have downside volatility, that's a great opportunity to use that volatility to better position your portfolio for a more normalized growth environment. So that means you can own a number of different sectors, not just information technology or comm services going forward.
Matt, just go a little bit deeper. When it comes to breadth, what is most encouraging for you? What part of the equity market, and what tells you that the earnings story there in that pocket, wherever you might choose, is more durable going forward from here?
You know, John, what's been most encouraging to me is you've seen resilience and an inflection point in earnings for financials, and that's finally started to translate to price, not just of insurance companies, but you're seeing a lot of the money center banks start to do well. You're starting to see the regionals reflect a little bit of optimism with respect to a rate normalization environment. That's very, very healthy, and you're starting to see deal flow come back to the market as well. So M&A is picking up, particularly down market cap. So that's an area of encouragement to me. And you've also seen very positive surprises in sectors like healthcare, utilities, real estate. Those are all parts of the market that really haven't performed for a very, very long time, but you're finally starting to see things work outside of just GLP-1s. HMOs are finally starting to work a little bit more. That resiliency is translating into price breadth. And when I talk to clients, those are parts of the market I'm encouraging them to lean into, because valuations are still very, very attractive.
Matt, one thing that you point out is that we have seen expansion in profit margins, and you said that that gives you confidence that we're not going to see mass layoffs in the near future. How do you distinguish, Matt, between the idea of healthy profit expansions versus squeezing blood from a stone or price gouging or some of these other kinds of political hot potatoes?
Price gouging is the word du jour, I guess, after the economic policies were announced last week. But I just don't see that going on. When I look at a lot of the corporate income statements and balance sheets for the companies that we look at across our company, what you're seeing with respect to profit margins is that companies are being more innovative. I know we complain about not seeing enough of AI monetization, but when you actually look beneath the surface out of the mega cap space, you're starting to see more efficiencies come from companies that are dabbing their toes with respect to artificial intelligence to drive increased productivity. On top of that, you're seeing wage gains start to normalize as this disinflation and disinflationary environment continues. So that's also giving companies the ability to better make profits while keeping prices a little more consistent. And on the services side, you're still seeing prices increase, but in a normal environment, and you're not seeing the dislocations that really caused the issues that have led to inflation over the past few years persist. So, disinflation hasn't decimated our ability to generate profit margins, and that is a very important message for customers going forward, is that you can have confidence that there is resiliency there, that we're not seeing that story fall apart like a lot of folks expected.
Does this picture of resilience jive with this idea of 200 basis points of rate cuts by the end of next year, which is basically what the market's pricing in?
Yeah, not to me, Lisa. I don't foresee these mass rate cuts that a lot of the markets started to price in really aggressively after, the volatility over the past few weeks. Given the fact that the economy is slowing, we're not heading off of a cliff. I think the totality of the data does not support that, and especially what we heard last week. So I would be very surprised if there was a 50 basis point cut coming in September, because it's just not justified based on where we are. And I think the market needs to rethink the depth of rate cuts that need to happen, or at least the pace at which we get there, because again, it might not be justified with where we are and the fact that there are still sticky components to inflation. Look at housing. That's been a problem area. You're still seeing issues with respect to insurance prices. You still do see some wage gains. So there are still issues that Fed has to deal with, but they can take cover and I think start to cut in September.
Matt, Lisa mentioned price gouging. Can you give us a sense how politics are playing into your investment playbook?
Anne-Marie, I get this question a lot from clients, especially with election season coming. What do I do to position my portfolio for whoever I think is going to win this election? And my answer is the same to every single client. It's don't. Just don't try to do it. What I try to look for and encourage our investors to look for are secular growth themes that are really going to be durable throughout whoever ends up winning this election. And there's a lot of those themes out there. I tend to point to artificial intelligence 2.0, which is really who are the CapEx beneficiaries of the hyperscaler spend. I mean, we've seen over $200 billion of CapEx committed just over the next year alone from 4 single companies. That's a lot of money to go around and a lot of visibility with respect to earning streams for companies from industrials. Your electrical equipment makers look very, very attractive. Defense is a global theme, and defense tends to do well heading into an election season no matter what way that you're leaning. So there's a lot of pockets you can lean into to try and avoid the noise of politics and then sift through the dust once we actually have a tangible outcome.
Well, one thing is clear. Both these candidates want to spend next year, and there will be tariffs in some form, either a continuation or they're really the walls are going to come up much higher. In that sense, are you worried at all about the deficit?
I think the deficit's one of those issues. What do you say? You'll know it when it actually matters. And I think I don't mean to downplay the severity of the challenges, but I think based on where we are right now, it's not going to impede, I think, some of the themes that are driving this economic cycle for at least into the medium term. That said, what we do today will set the stage of how severe some of those issues coming home to roost will be in 3-5 years down the road. So I do encourage investors to think very carefully about what those policies are going to do. And again, on the issue of tariffs, it's just yet another reason why I don't like China as an investment theme. I think there's so many other opportunities across emerging markets and international developed markets for investors to get diversification in portfolios. You don't need to play the China game because, as you pointed out, Anne-Marie, tariffs are a universal issue at this point.
Hey, Matt, good to hear from you. Matt Auden there of Raymond James. On the global outlook, just on the debt and the deficit, 20-year bonds coming this week. This is for Lisa, $16 billion worth. 30-year tips reopening as well, $8 billion worth a little bit later this week.
When will we find out when people care about the deficit? I mean, I think about the deficit, which is Steve Eisman's moniker of all of the long-standing fears about the deficit. At some point, it will matter. And this really is the key question for me. Not necessarily shifting the borrowing costs in a significant way, but causing this ongoing volatility that we were talking about last week is kind of the new normal. I mean, we're seeing such volatility in 10-year, 2-year Treasury yields. Is that kind of what we can come to expect, not only with questions around inflation, but also the fiscal pact?
Making auctions great again by Lisa Bramford. Let's get you an update on stories elsewhere this morning. Here's your update, your Bloomberg brief with Danny Berger. Hey, Danny.
Hey, John. Israel and Hamas leaders are blaming each other for a stalled ceasefire and hostage deal. Israeli Prime Minister Benjamin Netanyahu accused Hamas of being completely obstinate, while Hamas said Netanyahu is fully responsible. U.S. Secretary of State Anthony Blinken is in Israel now, meeting with top leaders. Earlier today, he said that this is a decisive moment and maybe the last opportunity. The U.S. said talks on a Gaza ceasefire are in the final stages. And European airlines are outpacing the U.S. on cleaner jet fuel. That's according to a Bloomberg Green analysis. In part, it's due to a government mandate. The EU will require airlines to use 2% sustainable aviation fuel starting next year. Estimates from the International Air Transport Association show that most airlines are lagging far behind their pledges. Their use of sustainable fuel grew just under 0.2% in 2023, but that is up from 0.04% in 2021. The ports of LA and Long Beach, which account for nearly a third of all U.S. container imports, are seeing a frenzy of volume. It's rivaling the highest import levels set during the pandemic. The volume stands in contrast to concerns over a cooling economy. Instead, retailers are stocking up ahead of a potential U.S. tariff on Chinese goods and a potential strike by American dock workers. Though there is a threat that consumer spending weakens meaningfully, leaving warehouses full and companies with too high inventories. And that's your brief, John.
Some of those numbers reported over the weekend, just absolutely staggering, phenomenal. Thank you, Danny. As always, up next on the program, Donald Trump's swing state offensive.
Starting the day I take the oath of office, I will rapidly drive prices down and we will make America affordable again. We're going to make it affordable again.
New tagline, that conversation up next, live from New York City this morning. Good morning.
Was going to keep rating World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome to the program. 7-day winning streak on the S&P 500, looking to make it day 8. Equities just about positive on the S&P and yields just about lower by a single basis point. The 10-year 387.30. Under surveillance this morning, Donald Trump's swing state offensive.
Starting the day I take the oath of office, I will rapidly drive prices down and we will make America affordable again. We're going to make it affordable again. Under Kamala Harris and crooked Joe Biden, the American dream was dead, and it is dead. It's dead as a doornail. They'll never bring it back unless we win.
Here's the latest. Donald Trump hitting the campaign trail with a full week of DNC counter-programming. Trump hosting rallies across swing states and making a visit to the U.S.-Mexico border on Thursday, the same day Harris is scheduled to give her acceptance speech at the DNC. It's been a complaint over the last week of Republicans around the campaign, inside the campaign, about their nominee. Can he remain disciplined enough to stay on topic on immigration, on the economy?
They don't want him veering off into attacks against Kamala Harris. They don't think that polls well, and they think that actually makes independent voters say, oh, I don't like this again. I don't want another 4 years of these grievances and personal attacks back and forth. What they want him to talk about are the things he polls well. He polls higher. He was polling higher than Biden. He's polling higher than Kamala Harris when it comes to the economy and when it comes to immigration, which is why Thursday is going to be interesting. This is proper counter-programming. Remember, she was given this task of looking after the root causes of immigration. Some journalists ran with that and called her the border czar. Then they now are starting to walk that back, saying she wasn't the border czar. The exact quote from the White House is she's going to be looking at the root causes. The Republicans say, no, you called her the border czar then, it didn't work. And this is one of the biggest problems facing the Harris ticket. It's the economy and it's immigration, and Trump's going to try to stay on message. I think the campaign wants to stay on message as best he can this week.
There's a fissure, though, that's emerging within the Republican Party right now, and it's not just with Trump and whether he should stay on message. It's within the party and whether his advisors are making the right kind of plea to go more moderate, to cater to independence, and whether that's fair, given the fact that a lot of people are saying, actually lean into what's made you as popular as you are, which is your base. And you can feel that tension coming to the fore with calls to potentially replace the likes of Corey Lewandowski. But this is, to me, something interesting to watch in terms of who Trump listens to. Is it the growing number of commentators who are saying, stop it already, go back to what you used to do, or his own advisors?
You know, it's funny, we talk a lot about the differences between these two candidates. There are many. But can we talk about the similarities? We've got Kamala Harris effectively copying one of the policies that Donald Trump would like to introduce, no taxes on tips. It's a very big difference in language between the vice presidential candidate on the Republican side and what we're hearing from the current vice president, Kamala Harris, on child tax credits. You've heard from J.D. Vance, who's basically said people who have kids should pay fewer taxes. I mean, the policy already exists, but then Kamala Harris comes out and says we want a bigger child tax credit. When it comes to tariffs, Harris is saying it's a Trump tax. I don't hear anything from the Democratic Party about removing the tariffs that already exist. They've stayed on through the Biden administration. So I think we have to take a step back every time we do this. There are massive differences, but there are a lot of similarities between what's on offer here as well from both parties.
Absolutely. What's clear to me is that next year, the child tax credits may be going up. That has bipartisan approval, but this is populism on both sides.
Big time. Coming up on this program, we'll catch up with Bloomberg's Bobby Ghosh with peace talks stalling in the Middle East. That conversation up next from New York. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
This just in from Bramo. She says that if they get rid of taxes on tips, she will pay less in tips.
Oh, whoa.
Restaurants across the country.
You're going to put this on me.
This just in.
Okay.
Good thing a journalist was around the table.
Critical analysis from Bramo. Says she's going to get a spreadsheet and work out what would still be consistent, just in terms of what she's offering, if they get rid of the tax. Quite a take from Lisa, just moments ago in a commercial break.
Really?
Equity futures right now in the S&P 500.
Hey, that was totally what you were saying.
I was raising the question if people would actually do that. Would people do that? Would you do that? Would I do that?
I don't think
Equities
that you
right now in the
could.
S&P. I mean, maybe you could.
Well, guess what? Guess
Maybe
what?
you could.
The policy.
No, maybe you could.
It's not happening.
You don't think it's happening?
No.
Why don't you think it's happening?
Because this would be very difficult to get through Congress, one. Two, would it actually be effective given the tax rate people that normally work in this industry, they're already the rate they're at. They're already mostly not paying that income tax. Three, the loopholes that potentially be used against this, the Democrats would not vote for. AKA, if you're a hedge fund, could part of your pay now be given, say, a bonus as considered a tip, and then you don't have to pay taxes on it.
Newsflash, the only reason why that's okay is that nobody believes that I would lower tips. Nobody thinks that I would go that low. That is not in character. That is not how I would act. I think that I would continue to do 20%.
You think you have the personality of a good tipper?
I do.
Is that what you're suggesting?
Well, I am a good tipper, so I think that I do have the personality of that.
No, just wondering.
Yeah.
Just wondering.
I think I take pride in that.
Do I have the personality of a good tipper?
You do, but I think that you could adjust.
Well, it depends.
Continue.
True endorsement of someone's personality if you believe they have the personality of a good tipper.
I agree. I think that if somebody's really a penny pincher with the way that somebody treats them, I think especially if they have the capacity to pay, even with tax-free, I don't think that they would adjust it.
I will settle this. Do you tip on credit card or do you give cash?
Oh, I don't carry cash.
Okay, well now I'm judging both of you.
Oh, you carry cash to tip?
Sometimes, yeah.
Okay.
Sometimes.
All right,
self-righteous.
I don't know how we got into that. What's that about? That's very self-righteous. You carry cash just to tip.
Well, then
you go out like for a coffee. I've been for coffee with you. You never tip. What are you talking about? Equities on the S&P. Just about positive here. Seriously, never seen that in my life. What's she talking about? On the NASDAQ, just about positive as well. 7-day winning streak on the S&P 500. Incidentally, the longest winning streak on a daily basis, only going back to July. So it's not the length of this winning streak, it's the size of the gain over the period that's pretty phenomenal. We're talking about a move of 6.8% higher over that period, and the best such run, Lisa, going back to 2022.
Just what a whipsaw, and this came without some massive sell-off in the bond market. That's what I find interesting. This is without reassessing whether steep rate cuts will be necessary. So the economy can be good and you can get lower rates because of disinflation, and that seems to be where we're at in markets right now.
If you switch to the bond market, just turn a page and switch on the board. The 2-year pretty stable over the last week or so. Yes, a lot of movement in between, but from point to point over the last few Fridays, 4.05%. 2 Fridays ago, 4.05% this morning. We're kind of anchored at the front end now, Lisa, as we drift towards Jackson Hole, and we continue that conversation about whether it's 25 or 50 at the September Federal Reserve meeting.
One thing's been lost. lost over the past couple of months. And that's this idea that the neutral rate might be 4% or 5%. Nobody's saying that anymore. People are saying now that the neutral rate is back down near where it was before, maybe a little bit higher, but there is this feeling that the Fed has more room to cut than maybe 6 months ago, which is a new, and for the stock market, beautiful thing.
First message I got on the Bloomberg terminal, aren't bonuses tips? To your point, straight away. Bloomberg subscriber. I'm sure they've got their own pay in mind.
I mean, you have to think, then they're basically saying to their company, do I need to be taxed on this? And this is where the conversation is going to go.
Exactly. Employees are going to say, those extra bonuses we get, that is technically a tip. And then they're not going to want to start to pay taxes on this.
This conversation, of course, connected to the bond market because we hear all these proposals and hardly any connection to policies about revenue raises. What's going to happen with the Trump tax cuts from a couple of years ago back in 2017-18? Who's going to push them forward? Donald Trump says he will. Are they going to expire under a Harris presidency? Will elements of it expire? Have they been clear on that?
Basically, there have been a couple of studies done about how much the deficit increases under both Harris and Trump. And basically, it does increase under either of them. Exactly how much has been different. It ranges from $1 trillion to $7 trillion. A lot of people say that actually the Trump plan probably increases the deficit more than the Biden plan. There's a lot of disagreement on that. That's sort of a political discussion around the political analysis of proposals that are really lacking in detail. So all of this, nobody's going to say we're going to reduce the deficit, which is a reason why we're going to make auctions great again.
Making auctions great again with Lisa Abramovich for the year ahead and maybe the next several years, waiting for that big moment. Dollar yen at the moment looks like this, 146.20. This is such a snarky market check. 146.20 on dollar yen. We've got to move about 1 full percentage point, so a much stronger Japanese yen, and we haven't got a breakdown in risk, and I think that development or lack thereof is really important on a morning like this morning compared to where we were a couple of weeks ago. That's some of the price action for you. Under surveillance this morning, Vice President Kamala Harris holding a narrow lead over former President Donald Trump in the latest Washington Post ABC News Ipsos poll. Harris standing at 49%, and Marie with Trump at 45%. And swing state leads, we've seen this repeatedly. This is a tight race away from that poll. From the national horse race, you go to the swing states, this is still super tight.
And there was one over the weekend from the New York Times, Siena College, and it shows how quickly Harris is able to really try to shore up and tighten that race when it comes to the Sun Belt. Talk about tax on tip. This is a pure political play in a state like Nevada, where the hospitality industry really trumps everything else, and they're vying for those votes. When you look deeper into the poll, especially that Washington Post ABC poll, yes, she's tightening the race, she's even winning slightly, but look at the top two issues. Trump still has the advantage, the economy and immigration, and that is why some members of his campaign really want him to stay on message.
Let's see if he can do that. It keeps coming back to those two issues. Let's pick out one of them, the economy. Goldman Sachs lowering recession odds this year to 20% from 25%. Economists citing last week's retail sales and jobless claims data, adding that if the August jobs report looks good, they would probably cut that number back to 15%. So it comes back to that date on the calendar all over again. It's September 6th, and it's the August payrolls report, Lisa, before September 11th, when we get the CPI report, and then a week after that, a Fed decision.
Let's just put that into perspective. They increased the recession forecast on August 2nd. It is August 19th. They are revising down that increased expectation based on data that we received in that time frame. You asked me earlier, is there any possibility of a narrative shift? I would argue, is there any possibility of not getting a narrative shift between now and September 18th, given the fact that the economic data has been all over the map? Also, with the revisions on Wednesday, we have to keep going back to that. All of the data that we get gets revised. So the payrolls numbers that we get, we're going to see the backward-looking revisions that mesh it with some of the payroll surveys that are done through other indicators. To me, this just highlights the fuzziness of being data-dependent on unreliable data points.
We've got to remember, though, that growth scare didn't just happen in isolation around one single jobs report. It was also jobless claims. It was also a spooky ISM manufacturing read with a very, very depressing employment component in all of that as well. If you get a increase in unemployment again on September 6th, but the rest of the data looks pretty decent, will people be willing to discount that? Do you really think we'd go back to that growth scare at the start of this month all over again?
I don't know. It depends on what happens with the carry trade and what happens with some other random trade. I mean, honestly, it's a good question, and I think that it's important to ask, right? What's the perfect recipe to lead it to a growth scare? What's the perfect recipe to allow a Fed rate cut for the right reasons? I don't know the answer to that, and frankly, markets don't know the answer to it because it's been different every single time. At this point, to even read into what we saw as a growth scare versus a carry trade unwind versus just simply markets that got too overpriced, either way, what we can see is a Federal Reserve that's going to try to set a message that allows for all of this, but to give them some control back, because right now they have kind of lost the plot a little bit when it comes to giving forward guidance.
We keep going back to that word calm. Things are calmer compared to where we were a few weeks ago, supported by some of the incoming data over the last week, both retail sales and jobless claims. I want to turn to this story. Israel and Hamas blaming each other for stalling a ceasefire and hostage deal. US Secretary of State Antony Blinken is in Israel right now, meeting with top leaders before heading to Egypt tomorrow, with talks set to resume in Cairo later this week. With us around the table, Bloomberg's Bobby Ghosh joins us for more. Bobby, good morning to you.
Morning.
So there's two sets of talks here. There's a set of talks between Israel and trying to work out what happens in Gaza. There's also a set of talks, Amos Hochstein, who we'll catch up with later, between Lebanon and Israel, coming to some kind of truce as well. How connected are those two talks at the moment for you?
They are connected in that the overall objective of all of these talks, and the reason why Blinken is there, is to try to bring down the temperature across the whole region. Israel's assassination of a top Hezbollah leader in Lebanon raised the stakes. Then Israel's assassination of the Hamas chief in Tehran raised the stakes even more. So it matters because of those reasons. But for the moment where everyone is focusing their attention, Blinken and the Biden administration certainly, is on the ceasefire talks over Gaza. Now, Blinken this morning, and perhaps even while we speak, was meeting with Bibi Netanyahu and other top leaders. Going into those meetings, he's used what for me is surprising language. He's been saying things like, this is the last opportunity for a ceasefire talks, the last opportunity to bring the hostages back. That is pretty strong language in diplomatese. It also puts the Biden administration in this awkward place. If Blinken comes back empty-handed from this trip, this is trip number 9, number 10, if he comes back empty-handed, having already described this as the last opportunity, where do you go from here? What we're hearing from the two main protagonists, both from Hamas and from the Israelis, each is blaming the other for stalling the talks. Hamas is saying Netanyahu is making new and impossible demands. Netanyahu is saying Hamas keeps asking for more. In private, or speaking to journalists off the record, the Biden administration has been saying things like, it's mostly Bibi's fault. In private, they blame Hamas, but in public, they blame Hamas. In private, they've been saying, this is mostly Bibi's doing. Reports from Israel are also blaming Bibi Netanyahu. There are polls coming out of Israel saying the Israeli public in a sizable majority, 60-some%, want a deal now. But Netanyahu has consistently disregarded what his own people are saying and what the Biden administration is saying. So his position that he's not going to move does not seem to have changed.
Can we pick up on the language? You've identified that as being somewhat surprising, perhaps even important. It begs the question, where's that coming from? Why is that language being used?
It's coming from frustration. The Biden administration has been pushing for this deal for months now. It comes from, I suspect, a last-ditch effort, diplomatic effort to try to get both sides to focus. And certainly try to get Bibi Netanyahu to focus on this. No matter how much the Biden administration has pushed him to do so, he has not done. He's been more interested in the actions of the Biden administration than the words. And the actions, frankly, reassure him. The Biden administration has continued to deliver to Israel all the arms that it needs to continue this offensive. And as long as he keeps getting the weapons, I don't think Netanyahu is going to actually move his position at all.
Bobby, last week, the president basically insinuated that these ceasefire negotiations could potentially mean no retaliation from Iran. We have the foreign ministry of Iran coming out today and saying that's not correct. These are not directly linked, and Iran will retaliate. Where are we in this retaliation? Because last week, when all the weaponry was going to the Gulf, everyone thought it was going to be immediately, and so far we haven't seen anything yet from Tehran.
Well, I think the Biden administration was throwing a Hail Mary pass last week when it said exactly that. Where the Biden administration gets the confidence to speak for Iran, I don't know. This was Iran reminding everybody, and especially Washington, we make our own decisions, we have our own timeline, our own agenda, you don't get to speak to us. That's what Iran is saying here. But Iran doesn't want a war. It didn't want a war with Israel over Israel and the United States. That's the working assumption. It did not want a war over the killing of Iranian civilians, top Iranian scientists, and the sort of perhaps the most important Iranian general, Qasem Soleimani, it's not going to want a war over the leader of Hamas, however important he may have been. It will retaliate in some way. I suspect that the longer this goes on, it gives Iran license for a smaller retaliation. And we saw this with Soleimani. Immediately after the Soleimani assassination, there were rockets fired in the direction of American bases. And then they, for a long time, continued to say, we're not done yet. We have not yet taken revenge for Soleimani. We'll come after the United States in a big way. In the end, that didn't happen. So the longer Iran sort of allows this thing to slide, it is hoping that it buys itself license to make a smaller, more symbolic attack.
Bobby, it was great to set the stage with you this morning. Appreciate it. Thank you, sir. Bobby Ghosh there of Bloomberg, setting the stage for a conversation that will continue in about 30 minutes with the President's advisor, Amos Hochstein. Look out for that around 8:15 Eastern Time. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Corporate America is attempting to hedge their bets on who will be the next U.S. president, according to FT reporting. Fewer CEOs are opening their wallets this time around. Federal Election Commission data show that as of June 30th, just 5 of the 221 members of the Business Roundtable have donated to either candidate. That doesn't mean companies are ignoring the election. Since July 1st, 319 U.S. companies have mentioned the election on their earnings call. That's nearly double the number from 4 years ago. Minneapolis Fed President Neil Kashkari is open to rate cuts in September. He told the Wall Street Journal that the balance of risks have shifted. In a change from his tone in June, he had said then that a rate cut might not be necessary until the end of the year. Kashkari said the conversation has shifted because, quote, inflation is making progress and the labor market is showing some concerning signs. X is shutting down operations in Brazil while keeping the service available in the country. A post from X's Global Government Affairs Department said that Brazil's Supreme Court Justice Alexandre de Moraes threatened the company's legal representative with arrest if X did not comply with censorship orders. In a separate post, Musk said the decision to close the office was difficult. And that's your Bloomberg Brief. John.
Danny, thank you. Up next on the programme, we're counting you down to Jackson Hole and the Fed's annual get-together, with equity futures just about positive on the S&P, coming off the back of the biggest weekly gain of the year so far.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Equities on the S&P 500 coming off the back of a 7-day winning streak and looking to continue such streak With an eighth day potentially, we're positive by just 0.03% on the S&P 500. In the bond market, yields just about lower by almost a basis point on a 10-year 387.30. Under surveillance this morning, counting down to Jackson Hole.
The Fed has a real opportunity here to sort of shift the narrative. And I would argue that they're starting that process now. You know, when Powell finally shifted to focusing on labor over inflation, which I would argue was long overdue, I think that's step one. And I think the next step is, hey, look, we don't think that things are really sort of slowing in a notable way, but we recognize that policy is calibrated for a completely different inflation regime than what we have right now.
So here's the latest. All eyes on Fed Chair Jay Powell as he's set to speak Friday from Jackson Hole. The focus turning from when to how big and how many rate cuts the Fed actually delivers. Kelsey Barrow of JP Morgan Asset Management writing the following. Simple policy rules would suggest the Fed could have already started easing by now. This was true even before the last jobs report, but further confirmed by the most recent CPI report. Risk-reward favors owning some duration in portfolios as we approach the start of the Fed's easing cycle. Kelsey joins us now for more. Now, Cassie, language is really important. You say easing. Some people might say removing restriction. Are you talking about a shift towards accommodation of the Federal Reserve?
Well, I think you are rightfully so picking up on a little bit of a differentiation. So when I say easing, I think the Fed in their mind views that as reducing policy restrictiveness. But I think when I look at the environment more holistically, putting aside the conflicting noise that we're hearing in terms of the labor market and the consumer, is it really weak or is it really strong? I think the inflation backdrop alone at this point probably justifies at least 100 basis points of rate cuts, not immediately, but I think a policy rate closer to 3.5% to 4% is probably where we should be trending just based on the inflation data alone. And that's because inflation is coming down. It's more broad-based. It's really just concentrated in two categories at this point, shelter and auto insurance.
Let's get into that a little bit more, sort of set the stage for the economic backdrop, and then we'll get into the market call. The breadth of the decline in inflation, how encouraging has that been for you? Where is shelter? Is that still a sticking point?
It has been very encouraging. I mean, so if you think about the inflation or disinflation that we saw last year, it was primarily a goods story, and that was the low-hanging fruit. What we've seen more recently is that the inflation or disinflation has broadened out, and it's now included the services category. Now, the shelter category, I know there's a lot of hemming and hawing over, is it coming down? Is it coming down fast enough? But, you know, I look at it, I look at the year-over-year rate, it's down 300 basis points, 3% over the last year. It's coming down, and I think it will probably continue to normalize over time to levels more consistent with pre-COVID, which is where the majority of the CPI basket is already trading.
You've been talking about this for many months. Basically, the rest of the market's come on board with you. And it seems like this is now consensus, and the market is pricing this in already, and some would argue has already moved for the Federal Reserve, which hasn't moved, and yet effective rates have essentially dropped that much. How disruptive would it be if Fed Chair Jay Powell doesn't lean into the rate cuts that are being priced into the market in his speech on Friday?
Yeah, that's a really good question because, you know, I look at the moves in yields this year, right? And they've all been driven by data. Not one has been driven by Fed speak. It's the data that's driving the market's reassessment of how many rate cuts need to be done this year. And earlier in the year, when there was concern about reacceleration risk and there were a couple hot inflation prints, the market priced out rate cuts. They didn't need Fed speak to do that. So I guess where I'm circling back to is when I think about Jackson Hole and what Chair Powell's responsibility is, you know, I think what we're going to hear from him is that he is comfortable with the inflation backdrop. This is an environment where the Fed can start removing policy restrictiveness, but I don't think he is going to be particularly explicit about how many rate cuts that will be or how far they need to go. I think that they're going to kind of continue to let the market do that work for them.
So in other words, he's not going to lean into it one way or another, which raises this question about the theme of the actual conference, which is reassessing the effectiveness and transmission of monetary policy. How effective and how much control do they have over the transmission of this monetary policy if all of the moves this year have not been driven by the rhetoric, have been driven by data?
Right. Well, I mean, I think that's because we've moved out of an era of true reliance on forward guidance. If you think about what forward guidance was and why it was created for an environment of the zero lower bound, right? It was when we cut to zero and we still needed to be even more accommodative and we had no tools left and we've tried quantitative easing, 1, 2, 3, what else can we do? Well, we can try to just jawbone the markets and continue to promise them low rates for longer. The environment we're in right now is not really an environment of extraordinary policy where the forward guidance that we need is that type of forward guidance. And so I think that the environment that we're in is one rightfully so where the forward guidance is not what's most relevant. What's most relevant is where we are in the business cycle. And to be frank, we're all learning that together, including the Federal Reserve members, as they watch the data.
Kelsey, when you were talking about the data and the market moving data dependent, that's because the Fed told them they were so data dependent. So it comes from the Fed basically saying, we're so data dependent, the market should be data dependent. Does Jay Powell need to almost take a step back on that when he talks in September this week at Jackson Hole before the potential cut or keeping policy in line? Take a step back on the market, you shouldn't be so data dependent?
So I do think there's probably an opportunity for him to use words such as gradual to describe the easing cycle. So he's likely aware that commentators in the media and financial market participants have been talking about the need for intra-meeting cuts after the July jobs report, the need for potentially 50 basis point rate cuts. I think the data he's seeing on a mosaic basis is probably not suggesting a need to be that quick to move. And so while I think he wants to communicate that they have the capacity to be quick, if necessary, the current environment is one where they can adjust slowly and recognize that in the event that something goes wrong, we're in a great position to respond because we're not near the zero lower bound. We have 500 basis points of policy space. And that's also, I think what the bond market is picking up. And while yields are coming down, spreads are also staying very well contained.
I just want to say this up front, present company excluded. The last year has been dominated on this program by a bunch of people trying to sell some bond funds and to get out of cash. And I hear it again now, sort of scaring people out of cash to say the rate cuts are coming, extend duration, get out of money market funds. Why is now the right time to do that? Because I've seen head fake after head fake over the last 12 months when people have given up, say, 5.5% and rushed out to buy duration when they maybe didn't need to. Why is now the right time? Why is now different?
Well, I mean, I was just looking at the numbers myself, and, I said, normally the conventional wisdom is once the Fed is done hiking, which was back in July of last year, it's time to start extending duration. If you were to have moved just a little bit of that cash into 1 to 5 year high quality corporate credit, so 1 to 5 year investment grade credit, you'd be 200 basis points ahead of cash at this point, 13 months later. So I think the proof statement is actually already there. And that's before the Fed has even started cutting.
Kelsey Barrow of JP Morgan Asset Management defending their sales pitch of the last 18 months. It wasn't aimed at you. Anyways, it was aimed at everybody who's made that pitch. Hear it again and again, don't you? If you are listening, you're thinking, I've been sat in cash, I've been receiving 5%. Should I shift out? Is now the right time? Are those rate cuts really coming? Is that 100 basis points of cuts just around the corner?
They said it 6 months ago, now they're saying it now. The interesting thing is the delta between people who say go into 1 to 5 year or the people who say go into 10 year. Fewer and fewer people are saying going into 10 year.
Yeah, hear more about the belly of the curve.
Yeah.
I agree with you on that point. Up next, the third hour of Bloomberg Surveillance with Jim Carroll and Morgan Stanley, Senior Advisor to the President, Amos Hochstein. We'll catch up with Lindsay Piazza of Stifel and Mike Schumacher of Wells Fargo.
Well, I think what's happening is we're starting to bring realism into the discussion. I mean, I think understanding the global energy system, the scale of that system, the important role that it plays in everybody's life around the world, and then thinking something that's been built over 150 years, trillions and trillions of dollars of investment that's playing such a critical role in the economies around the world, how you transition out of that system. And I would say transition from a higher carbon emission system to a lower carbon emission system. We started out with a very narrow solution set focused on wind and solar and EVs and assumed or aspired that that would address the total set of the issues, and it doesn't. We need to be more realistic around, to Patrick's point, there are a lot of solutions that are going to be required. We should stay focused on the problem statement, which is emissions, and reducing those emissions, and less focused on exactly how to achieve that, and let every company, every sector, all technologies compete for the most cost-efficient way to reduce those emissions, and we will make progress much faster, which will mean making today's system more emissions efficient while we introduce new systems that have lower emissions. And then with time, you will transition and we'll make progress.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. The top names in global leadership are on Bloomberg.
We are 40 million. We're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone. Only our lives are at stake here, and nobody can just trade our lives.
Nobody covers the top global leaders like Bloomberg Television and Radio. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
We've got a good situation here. Things are indeed getting better.
You're still seeing that some of that U.S. exceptionalism is still there.
While we look at the earnings data that is in front of us that looks to be quite positive, as we look ahead at the second part of the year, we're not quite as optimistic.
I wouldn't mind if things just kind of simmer down a little bit. And I think they will.
You've got all these disconnects that I think markets have to reconcile themselves with.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
We are 90 minutes away from the opening bell, and the third hour of Bloomberg Surveillance starts right now. So let's start with your scores on the S&P 500, totally unchanged. Likewise on the NASDAQ 100, pulling back just a touch on the Russell, the small caps down by around about 0.1%. We've talked lots about the week ahead. We have to start the conversation again this hour with Chairman Powell in Jackson Hole, Wyoming, delivering that big speech at the annual get-together over at the Federal Reserve, a bigger speech after the conflicting data we've seen over the last month.
And increasing expectations for at least a 25 basis point rate cut next month, if not a 50 basis point rate cut. Let's just frame it as this. After a tumultuous couple of weeks, pretty much everyone out there is praying that it will confirm what's going on in markets so they can go on vacation for the rest of the summer, because that's essentially what I hear from pretty much every single person and what I'm reading in the notes. By the way, I'm not going to be here after the Jackson Hole speech. So how much is this basically, please confirm that it seems like we're on the same page and that we can all go on vacation.
Do you think he needs to validate market pricing? Do you think he needs to go that far, or just validate the idea that they will be reducing interest rates in September?
That they will be reducing interest rates in September. He can talk about other issues, et cetera, but it's not going to be, a prescriptive type of speech. It's going to be a philosophical one, the type that I really love. It's not going to be the pain speech where he comes out for 8 minutes and says, pain, pain, pain. He's going to come out and talk about, the balance of risks and all sorts of other things. It's going to be maybe less declaratory than it has been in the past.
So not mission accomplished, but maybe a risk management story. Let's reduce interest rates and get ahead of potential weakness.
That was much better said.
It feels like that's the arc of the Fed speak over the last couple of months anyway.
Yeah.
So that's not going to feel too jarring. It feels like that's where this is going to land.
And the idea of preemptive rate cuts, I think, will come into the fore. The idea of landing this sort of soft landing, how do you do that? You have to get ahead of the weakness and really cut rates in tandem with inflation coming down. We've heard that from Austin Goolsbee. We talked about gradual rate declines from Mary Daly over the weekend. We heard that from a whole host of others as well, including Neil Kashkari. So if he leans into that, people will say, great, I can go on vacation.
2025 is a bit of a mystery. And to fill in some of the gaps of that mystery, I think we need to talk about the politics and the policy that's going to come out of the DNC this week. We've had a vacuum when it comes to understanding what the policy platform actually is on the Democratic ticket. We've had a sprinkle of language here and there about price gouging and child tax credits and not having taxes on tips, which is something we heard from the former President Donald Trump as well. You just wonder if we get more detail this week, because I think we really are lacking real detail about what policy is going to look like in 2025. And if we're going to have a serious conversation about monetary policy for the next 18 months in Jackson Hole, Wyoming, don't we need a serious conversation about fiscal policy in Chicago?
And it's really hard to have those conversations about what 2025 will look like, what the Fed will be dealing with, depending on who is going to win the White House. When it comes to the Democratic ticket and their economic policies, we heard a little bit about a sprinkle of it, as you would, Jonathan, but it's really lacking in the details. Jason Furman saying that, at least when it comes to price gouging, he hopes the proposal ends up being a lot of rhetoric and not reality. And I think that is really the takeaway for the entire policy proposals we're going to hear at the DNC. A lot of rhetoric, likely not reality.
It's so sweet. You're saying, wouldn't it be nice if we get, more details? I hope. Don't you think that we will? The answer is, of course, we're not going to get that. But keep hoping. It's actually really endearing.
This is what makes it so difficult. Anything you hear from the Federal Reserve on Friday, you've got to at least acknowledge there's a lot of stuff they don't know about 2025 and beyond.
Which is the reason why a lot of people are just adopting, we don't know what we don't know, so we're going to go with what we do know, and we're just going to talk about the near term, and that's basically what you hear from pretty much every investor out there.
And the outcome of all of that over the last week has been buy stocks. 7 days of gains on the S&P 500. Day 8 potentially. Equity futures this morning just about positive on the S&P by almost 0.1%. In the bond market, yields lower by a basis point or two, down 2 basis points to 386.35 on a 10-year. Coming up this hour, we'll catch up with Jim Karen of Morgan Stanley, with stocks coming off the back of the best week of the year. White House senior advisor Amos Hochstein as Israel and Hamas talks come to a standstill yet again. And Lindsay Piegza of Stifel on the Fed's September tightrope. We begin with the big issue. Stocks notching their best week since October 2022 as investors digest data pointing to a still resilient U.S. economy. Jim Karen of Morgan Stanley weighing in on recent volatility, saying this: perhaps the price action told us more about market positioning than economic fundamentals, which are cooling and normalizing, not collapsing. The speed of the market move is more significant than the magnitude. Jim joins us now for more. Jim, wonderful to catch up with you once again, sir. I want to sort of rewind just a couple of weeks, because we caught up really at the height of this growth scare and this big cratering we saw in markets all over the place, all that drama, Jim. And you said buy some of that fear. You were walking into it, leaning into it and saying, buy this market here. Jim, what gave you that sign, and are you sticking with that view from here into year end?
Thanks, John, and good morning. Yeah, when we last spoke in early August, right after all of the volatility in the markets, our view was that around 5350 in the S&P 500 was roughly a fair level for markets. That basically represented $275 earnings in 2025 and about a 19.5 multiple. Nothing egregious. I think that's pretty reasonable. The overshoot that we saw did not match up or did not line up with economic fundamentals. Yes, we had a slightly softer payroll number. It created a lot of excitement. There was the unwind of the yen carry trade. All of these things happened at once. There was definitely an unwind of a lot of positions. That's what made us say, look, what matters more to markets? Is it technicals or is it fundamentals? Will the technicals trigger something fundamental? And we basically said no. And the way we thought about it was that this was a good opportunity from a value and risk balancing perspective to add to equities. And we did. We added to Japanese equities. We added to U.S. equities, and really just the beta. We just went right into the markets. And now, we might parse that a bit, but effectively, we still think that, the market is in a secular bull market. Now, I will say that this also, 5350 is still my number. So the fact that we are a little above that or decently above that now is actually making us think about taking some profits on that. I think it's going to be difficult for the markets to really run much higher than around 5,600, which was close to the highs that we saw in July. So I think we've had the recovery, and now it's time to rebalance some of those risks a little bit down and maybe take some chips off the table.
Where would those chips go? And Jim, this raises a different question. You were willing to go against the grain in the equity market at the start of this month. I wonder if you're willing to go against the grain in the bond market, given the argument we heard about 20 minutes ago. And we've heard this argument repeatedly. Rate cuts are coming, add to duration, avoid reinvestment risk. Are you taking the other side of things in fixed income too?
Yes, I am. And look, I mean, effectively, I think the markets had priced in. One of the big overshoots that we saw was the market was starting to price in 200 basis points of rate cuts to 250 basis points of rate cuts. We thought that was excessive. So effectively, if we get a policy move by the end of 2025 where the Fed funds rate gets down to 4% or 3.5%, I don't think 10-year yields will be materially far away from where they are today. What we have to remember in fixed income is that there are two components of return. One is the coupon and the other is the price movement. I don't think over the next 12 to 18 months, you're going to get a lot of appreciation of the price movement. But what rate cuts by the Fed do is they really ensure that you're likely to get the coupon. So the return expectation for fixed income should likely be the coupon at this point, not so much the price movement of the bond, which is what we refer to as the duration element of market. So I am pushing back against it because I think the bond markets actually are running well ahead of even what the Fed may say coming up to Jackson Hole.
We talk about the Fed when we talk about the belly of the curve, the 1 to 5 year kind of maturities. I am wondering how much the fiscal backdrop weighs on you when you start talking about 10-year treasuries and beyond.
Yeah, I mean, the fiscal is my number one worry. I mean, if people say what keeps you up at night, that's what it is. It doesn't matter what the next administration is or whatever. We're going to have to deal with this fiscal problem. The issue is that we have a deficit around 6% of GDP in a period of time when things are kind of going okay. Imagine if we did fall into a harder recession, and typically there needs to be fiscal expansion to support the economy. Where does that put debt to GDP? Where does that put deficit to GDP? Does it put deficit to GDP around 10%? I mean, my gosh, this becomes a bigger problem for us going forward. What it really tells us is that the safety net from the federal government to have fiscal expansion to be counter-cyclical in a period of weakness is a lot less today. That makes the U.S. economy in a more dangerous, vulnerable place because it doesn't have the ability to do counter-cyclical policy as much.
There are two different sides to this. There's one that might not be as supportive to risk because going forward there won't be sort of the relief valve in some sort of downturn. And then on the flip side, there's this question of whether yields have to be higher and auctions messier going forward. Which is it for you? Is it really the fiscal response to some sort of downturn, or is it the fiscal overhang that causes bond vigilantes to raise from their grave and come out with sticks?
That's a good way to put it. I think it's a little bit of both. I mean, to be very honest, I think it's really the fiscal maneuvering room that we have a lot less of. I think that's much more important. The bond vigilantes will work with the markets. If there's a profit to be had by being long bonds and yields going down, that'll be taken. But we have to think about the shape of the yield curve, because what we have to understand is that in this particular environment, if there is an inflationary backdrop, which I believe that there is, when the Fed cuts rates, when there is fiscal expansion, that adds an inflation impulse to the markets, which means the curve steepens. So if the old playbook was, let's cut rates and let's bring down that 10-year rate, let's bring down that 5-year rate, the answer today may be that 10-year and 5-year rate may not come down as much as it used to do when we were in a disinflationary, deflationary period. That's the risk, is that the curve steepens out a lot more, in which case the rate cuts don't bring down the borrowing costs where most people, not just banks, but most people buy cars and houses and things like that, and corporations fund themselves at, which is the 5 and the 10-year point. And that's one of the big things I don't think is really spoken about enough. And I think Powell's going to have to address this at Jackson Hole a little bit.
I just love that you answered that with a straight face. Jim, thank you. Jim Karen and Morgan Stanley.
As he should.
Why have they got sticks? That's what I want to know. Why have they got sticks?
They're protesting. It's like pitchforks. They come with pitchforks. That's what bomb vigilantes do.
Yeah, right. It's not, okay. Let's give an update on stories elsewhere this morning with the Bloomberg Brief. Let's get to Danny Berger. Hey, Danny.
Hey, John. Donald Trump is battling Kamala Harris for momentum this week. He's planning an aggressive schedule as the DNC kicks off in Chicago. Trump will hold rallies in 4 swing states and visit the U.S.-Mexico border on Thursday. That's ahead of Harris's acceptance speech at the DNC. He'll also sit down for a series of interviews. His aides say it's an intentional effort to goad Harris into an unscripted interview herself. A Washington Post ABC News poll released Sunday shows Trump lagging Harris by 4 points. San Francisco Fed President Mary Daly told the FT that she has more confidence that inflation is under control. Even so, though, she argued for a patient approach to policy, saying gradualism is not weak, it's not slow, it's not behind, it's just prudent. She added that the economy is not in an urgent place and that while slowing, the labor market is not weak. Her comments come ahead of Jackson Hole, where Chair Powell will speak on Friday. And Estee Lauder CEO Fabrizio Frida will retire in June of next year. The company says it is well advanced in its hunt for the replacement. Frida will remain in charge until a successor is named. Estee Lauder also reported earnings this morning. They forecasted annual growth that missed expectations. As of the Friday close, shares have fallen 35% year to date. And that's your brief, John.
Danny, thank you. Thank you very much. One further top story, the top story. Happy birthday to our good friend Mohammed Al-Arian. I won't mention the age. You can check that out on Wikipedia. I promise we stop counting at 50 until I catch up, and then we resume.
Happy birthday. I mean, honestly, what kind of national event will he be at? Will it be the Olympics this time? He was like in the front row of all the major ones.
What's left to go to?
I mean, Taylor Swift. What's the next sort of...
Something like a 12-month celebration. Like on repeat.
Rightly so.
Mohammed, thank you for being you. We appreciate it. Up next on the program, the Morning Calls Plus. White House senior advisor Amos Hochstein as Israel and Hamas truce talks stall once again. That's next. You're watching Bloomberg Surveillance.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Live from New York City, welcome to the program. We're counting you down to the opening bell about 1 hour and 14 minutes away. Your scores look like this on the S&P 500. Equity futures just about positive by 0.1%, looking to build on a 7-day winning streak on the S&P. Let's get you some morning calls. Your first one, first up from Piper Sandler, downgrading Shake Shack to neutral, the firm tempering its view on fast casual dining, adding that risk-reward for the burger chain has become more balanced. That stock is down by 3.6%. Your second call from Morgan Stanley, downgrading HP Inc. to equal weight, keeping a $37 price target. The firm saying that the personal computer company now offers limited upside on both estimates and valuation. And finally, MoffettNathanson initiating coverage on Apple with a neutral rating and $211 price target. The analyst Craig Moffett saying AI potential is already priced in, but noting that execution risks are still on the table. That stock is still just about positive by 0.6%. That's some of the morning calls. Let's turn to geopolitics. Secretary of State Antony Blinken arriving in Tel Aviv as Israel and Hamas truce talks stall yet again. Senior advisor to the President for Energy and Investment, Amos Hochstein, playing a key role in easing tensions in the Middle East for the Biden administration. He joins us now. Amos, great to see you. Widely regarded as one of the President's most trusted security advisors. You were in Beirut, I believe, in the last week as well. Can you set the stage for us? Just help explain to us where talks are currently, both between Lebanon and Israel, and what's happening currently in the Gaza Strip as well.
Well, first, good to be here. Thank you for having me. Yeah, I was in Beirut last week. We had obviously rising tensions and escalation of different reprisals and different threats across the region. The president had ordered large parts of military, U.S. military to the region, and of course diplomacy to commence as well to be able to reduce tensions. The most important thing the president is focused on now that we want to achieve is a ceasefire agreement that brings the hostages home finally to their families, brings relief to civilians in Gaza, and sets the stage to end this war. That's the most important thing. So the talks in Doha last week, talks continue right now. As you said, Secretary Blinken is in the region, in Israel today. And I take issue with stall. I think that the press wants to have some there's a movement every single day, but these are very serious discussions that will continue over the next several days.
Well, educate us. Where has there been movement?
Well, I can't, obviously, for obvious reasons, can't go into the details of the details of the talks, but they are progressing things. That's why Secretary Blinken is there, and the work will continue. This never happens overnight. But I'm confident that we'll continue to push as hard as we all can. And when it comes to Lebanon, look, we had a ratcheting up of escalation. We're trying to bring some of that down. I was there really to talk to folks about how do we think about the day after and talk about bringing some sense of normalcy for Lebanon. Look, Lebanon is at a war that I think its people don't want. That neither side really started. Hezbollah decided to join the conflict on October 8th, and we've been in a tit-for-tat ever since. So it's really important. That is a critical piece not to allow to escalate as it has ramifications for the rest of the region.
Well, Amos, you spent a lot of time with Lebanon's Speaker of the Parliament, who's very close to Hezbollah. What did he tell you about Hezbollah's intentions when it comes to Israel?
Well, as you know, Hezbollah and Israel have gone on rounds of conflict over the last several decades, on every several years. We've had relative quiet since the 2006 conflict ended, and through the Security Council Resolution 1701. It has never really been implemented by either side, so we need to get to another point. I think the speaker, as well as most Lebanese people, they just want this to end. They don't understand why they're at war.
But what tools does the U.S. actually have to pressure Lebanon?
Well, again, we can talk about what does it look like to end not only this round, but to put things in place that will create stability for the long term and bring economic growth and stability and prosperity in Lebanon. It's used to be one of the most successful countries today. They went into total blackout the other day because they lost the last fuel in their power plants. I mean, this is a country that should be prosperous. So that's the kind of things the United States and our allies can do. And I think the people of Lebanon want that. We have to get past this. One of the things that will make it a lot easier to do that, of course, is the ceasefire in Gaza.
Okay, so let's talk about the ceasefire in Gaza. The president said potentially this could be a way to halt Iran from retaliating. Iran has come out overnight and said that's not true, we're going to retaliate. Do you view these talks, which Secretary Blinken is talking about last-ditch final effort basically this week, as halting an Iranian retaliation, or does the administration still expect Iran to retaliate?
Well, I think the president has made clear his expectations when he gave orders for the U.S. military to take several actions to be able to defend both Israel and the region from a potential retaliation from Iran. We don't believe Iran should retaliate, period, but we want to de-escalate, and that's why the U.S. military is there. But at the same time, we are focusing on the diplomatic effort, diplomatic push, and that's why Bill Burns and Brett McGurk were in Cairo and Doha last week, why Secretary Blinken is in the region today and in meeting with Prime Minister Netanyahu just today. The United States put down a draft on Friday, so we're working with the parties to be able to get to an agreement.
Who is at fault here in terms of the gaps? Is it Hamas or is it Benjamin Netanyahu?
I'm not going to go into faults. I think there's no time to waste now, and neither party has an excuse to delay. If you want to bring some relief to the people in Gaza, if you want to bring the hostages home, this is the time to reach an agreement.
Why is this the time?
I think it's been a long time. This conflict has gone on for long enough.
I get that, but we keep hearing that now is the time. Why is now the time? What happens if Secretary Blinken comes back without an agreement?
Well, I don't think he's going there to come back with an agreement. It's just to move the process along in order to get to the point of an agreement. And I think he will do everything that he can. This is the most important moment. There's talks have been intensifying. We've seen what the chances and odds are for escalation. That's not something anybody wants.
I guess another way to put this is Tony Blinken said that this may be the last chance to reach some sort of ceasefire agreement. What happens after that?
Look, I want to focus today on being able to get there. And so that we're going to that's why the president's saying that he's going to put as much of his efforts that he can in order to get to that outcome. That's what we're focused on.
How difficult is the president to put all these efforts in when he's viewed internationally as a lame duck?
I think, first of all, there's one president. He is the president of the United States. I can tell you I've been traveling the world. I don't think that is the view. Everybody knows we have an election coming up. He's the president for the next 6 months. This is a crisis that cannot wait 6 months. I think everybody knows that. If you're talking about things that will happen over the next several years, then people will focus on talking to the next president, Kamala Harris. But I think that for now, these are not crises. When you talk about the U.S. economy, you talk about the global economy, you talk about the crisis in the Middle East, these are not things that everybody's going to say, well, let's just take and wait till January. That can't happen. So that's why you're covering the economy the way you are, and the president gets briefed. The last couple of weeks have seen volatility in the markets. We don't pretend that that we're just going to wait to January.
How often do you speak with the president?
As needed. Some weeks more often.
When was the last time?
Just a few days ago.
Just a few days ago. How engaged is he in these ongoing talks?
Extremely engaged. He has convened his team on a daily basis. He talks to folks to get regular updates. He is very, very engaged. He has calls with world leaders and regional leaders also weekly in order to be able to push this forward.
Your future, does it end with Biden or continue with Harris?
I served President Biden. Ask me that again in 6 months when President Harris takes office.
We have to say if, you can say when. We'll talk again in 6 months. Before that, no doubt. It's good to see you, sir. Thank you. White House Senior Energy Advisor Amos Hochstein there. Anne-Marie, on the state of play in the Middle East.
What I found so interesting is that Amos Hochstein did basically say, when Secretary Blinken says this is the last opportunity to get a deal, he's not actually going to be coming home with a deal. So these talks will likely continue, even if there's no breakthrough within the next 24, 48 hours.
This coverage will continue as well. Coming up on this program, we'll catch up with Lindsay Piegza of Stifel. We'll catch up with Mike Schumacher of Wells Fargo. An assessment of where we are in the US economy and what it means for monetary policy, and ultimately what it means for this bond market with Mike Schumacher of Wells Fargo. Your equity market on the S&P 500 shaping up as follows. On the S&P, just about positive by 1/10%. In the bond market, yields are lower by 2 or 3 basis points, 385.40. Music to Amos's ears. Crude is lower by 0.9%, 75.95 on WTI. And I'm sure you'd love to find time to talk to us about what's happening with the SPR, but we'll have to do that another day. Okay? From New York, this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Okay, so we're about 60 minutes away from the cash open. Let's start with the scores. Equities are positive by, let's call it a 1/10 of 1%. No drama at all this morning. On the Nasdaq, up by a 1/10 of 1%. Also, if you turn the page, switch at the board and get into the bond market, the 2-year exactly where it was a couple of Fridays ago. So 4.04% is where we are, down about a basis point. Plenty of volatility, though, through the week, particularly towards the back end of last week when retail sales came out much better than expected and jobless claims came in lower than expected as well. The 10-year down by about 2 basis points to 385.97, and further out along the curve, a 30-year at about 4.1%. Just want to touch base with the FX market, just to give you a flavour of things. The dollar weaker over the last 4 weeks. On a weekly basis, it is the longest losing weekly streak on DXY, going back to April 2023, 4 weeks of it. On dollar yen right now, more dollar weakness. Yen strength, 146.18, and we've noted this observation a few times this morning, Lisa. Interesting that we've got this move in dollar yen, and what you don't see in the equity market. The equity market is not standing off in the face of this, which gives you the impression, never mind all the estimates, that maybe a lot of that work has been unwound.
So this raises this question, how much of the carry trade has been unwound? There are other people saying that the probability of months and months of a carry trade being completely unwound in 1 week or even 1 day seems unlikely. That said, there is a peaceful feeling out there with the idea of dollar weakness. I'm looking not just at the yen, but also in terms of yen strength, but also the euro crossing squarely through 110 to the highest levels, the strongest levels going back to the end of last year. It seems like there are shifts afoot that are not being massively disruptive in the way that there were about 2 weeks ago.
You know that feeling when your European vacation is complete and you don't really care about the direction of dollar yen or euro dollar anymore? You just sort of see euro dollar through 110 and you're like, do whatever you want now. Bramo's done our trip.
Okay.
Take out 115.
Hold on.
Much better when I was there for the G7.
I will. Okay, fine.
Lisa's
I will just
kids
say,
went over to Tokyo, and now dollar yen just doesn't matter.
Nailed dollar yen.
You nailed the top of dollar yen.
They did nail the top of dollar yen. They really enjoyed sushi. They had a sushi conveyor belt that came on a bullet train. They were very happy.
Amazing.
Yeah. Okay. Let's move.
Bramo nailing dollar yen at 160. Nailing the euro at sub 110, around parity for a European trip. Everyone's going to want to know where you're going next and when. Under surveillance this morning, the DNC kicking off today with President Biden set to deliver primetime remarks. Vice presidential nominee Tim Walz delivering his formal acceptance speech on Wednesday. And on Thursday, it's the main event. Kamala Harris will formally accept the presidential nomination. Anne-Marie, you'll be there in the room. What are you looking for?
I hope so, Jonathan. That's if I can take off. I tried last night, didn't work out so well. So I think this is going to be a 2-part DNC. The first part, Biden basically flying in, flying out, but going to give this speech. And the room is going to really want to make sure he gets the proper send-off. And then it's going to shift quite quickly to this coronation of Kamala Harris. I would go to what Jason Furman said in one of the papers, which was he hopes that at least the price gouging proposal ends up being a lot of rhetoric and not reality. I think what we're going to get at the DNC is a lot of rhetoric and not a lot of reality of some of the policies we're going to hear. And then I would look at all the analysts we've had on, which basically said, enjoy your vacations, enjoy the beach, look at the polls, after Labor Day.
Come back for that first debate in September. That seems to be the main event for most people.
Especially to see whether they'll actually talk about issues, whether it'll be, a trash-talking contest, whether it will be the ongoing continuation of the honeymoon period that you noted with respect to Kamala Harris.
The issues don't go away. I want to reflect on the conversation we just had with Amos Hochstein just moments ago. We've still got a sitting president that's trying to address two conflicts taking place, the tension between Israel and Lebanon to the north, and the tension between Israel and Hamas, the war that's taking place in Gaza. And the talks are ongoing. Now, look, we use the word stall. It certainly looks like talks have stalled when you have a repeated sequence of talks that ultimately continue to go nowhere. They tell you that there is progress, but won't tell you where we've made progress. You asked about sticking points. We can't talk about sticking points. You asked about what's holding us back here. Is the Israeli side or Hamas? Couldn't get into that either. I understand the nature of these conversations mean you can't share too much, but these talks have been going on for a while now, and it's very hard to point to progress anywhere.
Well, it does also, though, seem that Amos Hochstein, when asked about who's really at fault, he basically said everyone needs to get on board. So not just putting the blame on Netanyahu or Hamas. But Antony Blinken, who's in Israel, going to be meeting in Jerusalem with Benjamin Netanyahu, said that this is a last-ditch effort. They are really trying to get this done before November 5th. And you asked why now? Why now? Well, what's happening at the DNC is there's going to be thousands of protesters outside the DNC who are painting Kamala Harris as part of what they believe is failed policy in Gaza.
It's a problem for the party and for the ticket going into November. As sent to this story, Chicago Fed President Austin Goolsbee telling Face the Nation on CBS that inflation policy from Harris or Trump must be scrutinized. Goolsbee avoiding directly speaking about the presidential race, but warning against the misrepresentation of the inflationary impacts of tariffs as well as corporate price hikes. Now, the problem we've got here, Lisa, the problem for them, for all of us, is that it's very difficult to set monetary policy for 2025 and beyond when we have no idea what we have in store in 2025.
If you listen to how he answered some of Margaret Brennan's questions, it was fascinating in that so many issues that are economic in nature have been so politicized that it's hard to have an honest conversation about them that will be treated as nonpartisan. I'm talking about tariffs. I'm talking about price gouging. I'm talking about tax cuts. I'm talking about other things that are being proposed right now. And basically what Austin Goolsbee said was, all of these issues have been politicized, so I don't want to weigh in on tariffs. I don't want to weigh in on price gouging, et cetera. So this becomes a sort of difficult moment where it's unclear what the policies are, and a lot of economic analysts are looking at this and saying, I don't want to weigh in too much for fear of being viewed as political. It's a little bit fraught right now.
You can have those debates in Jackson Hole later this week.
I'm excited for that.
Now, I'm going to be very careful with language in Jackson Hole, Wyoming, because that's a place, and that's where the conversation will take place. Michael McKee out on Twitter this morning. The cliche police have called, as we spend the next 4 days previewing the Federal Reserve Chair Powell's speech, avoid using the phrase, all eyes on Jackson Hole. It has been classified as a writing felony. So, Mike, I'm going to do my best. The Kansas City Fed's annual Economic Symposium, is that
Correct.
the right? Thank you. Okay, takes place this week, and Chairman Powell delivers a speech at it because he's been invited to it by the Kansas City Fed.
Right.
Okay, we've got that. Okay, speech takes place at 10 a.m. on Friday. What are we looking for?
Catchy.
Well, I tell you,
it doesn't work, does it?
Not in the slightest, but good try.
you did well. I mean, I'm just glad that Wyoming is in the United States. We use the dollar because Lisa's going, and we don't want any problems there.
All right. Okay.
I think that probably Wall Street's hopes are overdone in the sense, I mean, you look at Mohamed El-Arian, a good friend of this program, a good friend of all of ours, and he has this long list of things in his op-ed today that Powell should say that I don't think he's really going to get to. The main question for everybody on Wall Street is, do we get the green light for a September rate cut? And I think you get some shade of green from Powell because the data support that. But he's also going to warn we still have some data to come, so we'll watch that. And then the stuff about what is the neutral rate and where do we go, he has been asked that, Powell has, and he doesn't answer it because he said we don't know. And their plan basically is to take it meeting by meeting, and if the data still are on the same track in November, then maybe they cut again, and maybe again in December if that's the case, until they figure out where they think neutral is and we stop having some sort of restraint on the economy. The theme of the conference is the transmission of monetary policy, and has that changed? So he might preview the idea we're going to do a review of our monetary policy framework this year, but he's not going to talk about what he expects it to be because he doesn't want to front run that.
Do you think it's going to be an 8-minute pain speech? Not with pain, but with, sort of, we did it kind of speech? Or do you think it's going to be... Do you think it's going to be a pain speech or a painful speech? You remember back a couple of years ago when he came out, there's going to be pain.
I remember that speech.
It was 8 minutes. We were like, really, that's it? That's all you're going to do? And we're sitting there, okay, wow. I'm wondering if it's going to be this sort of long, rambling discourse on, whether interest rates, like once upon a time, there was an interest rate, or is this going to be something that's a very direct, we have room to cut, we will cut, we'll monitor the data, see you next time?
So probably somewhere in between. I mean, this is getting back to the way Fed chairs usually address the conference when they're not trying to make a policy pronouncement, and he'll probably talk about some of the history behind where we are and sort of set up the academic part of the conference. It won't be a pain speech. It won't be 8 minutes long. We will have, I think, a full complement of remarks from the chair.
Mike McKay will be the grammar police for the next few weeks, next week on Jackson Hole. Mike, thank you, sir. Michael McKee there. Lindsay Piegza of Stifel joins us now for more. Lindsay, thank you for joining us. Let's get into this. Do you think that the CPI report last week gives the Fed and the chairman just a bit more space to validate some of the market pricing going into September?
Well, I think it certainly gives the Fed more wiggle room to move forward with a potential rate cut in September. But I do think that the Fed, at least when we look out to Jackson Hole, is going to continue to reiterate the data-dependent stance. Now, the market has clearly been overreacting. We've seen the market calling for a larger 50 basis point cut next month. We've even seen calls for an emergency intra-meeting reduction. And so I think data, the strength in retail sales, the strength in jobless claims, juxtaposed with the improvement in the CPI and the PPI last month, but coupled with the volatility in market reactions, I think Chair Powell is going to keep his cards very close to the vest and reiterate that data-dependent stance, that we need to see still confirmation of this further disinflationary trend in the PCE data and further data points between now and the September FOMC meeting.
Lindsay, it's a pretty bold idea for what this Fed conference is actually going to be themed. The idea that really is the question that so many people have been asking. How effective is the transmission of monetary policy? Do you think that they are going to come out and say, given all these different demographic and economic shifts, their role in the U.S. economy is much less than it used to be?
No, I don't think he's going to come out and say that. I think he's going to say that the Fed continues to face a number of challenges. The economy is changing. We continue to face challenges as economists collecting data, making sure that we're accurately accounting for growth and inflation in the economy. So he's going to reiterate the ongoing transitions of demographics and different factors in the economy, but he's not going to downplay the very important role that the central bank and monetary policy play in shaping the business cycle and the overall growth rate in the economy. But again, when it comes to the expectations for policy, he's going to remain still very vague and talk about maybe a need to review policy, maybe needs to update policy, but reiterate the importance and the ongoing challenges that the Fed faces.
So it sounds like you're not expecting much, Lindsay. Is there anything at all that you think that we will get from this that could be market moving or frame how people look at the Fed's reaction function going forward?
Well, I think it's going to be disappointing to the market. I think the Fed chairman's comments are going to fall short of the market's expectation for a commitment to a reduction in September. And that's what we saw in the July statement. The Fed maintained the language that they're still not confident that a policy pivot is appropriate at this point. That was disappointing to investors, and I expect that we continue to see that disappointment. Now, that being said, a September rate cut is still very much a possibility and an increasingly likely possibility after last week's inflation data. But the Fed wants to see that confirmation in the PCE. If we see that, the Fed is likely to focus on that green light for September. But if we don't, again, the Fed wants to maintain that wiggle room, that movement. And so I think the Fed is going to be very clear that we're not there yet. We're almost there. We're approaching a pivot point, but they want to keep their policy close to the vest.
The Appreciate the update. Lindsay, thank you. Lindsay Pieg's there of Stifel going into Chairman Powell's address on Friday. For more on that address and what it means for financial markets, fixed income specifically, joining us now is Mike Schumacher of Wells Fargo. Mike, I want to go to this question first of all. Whether you still believe the big drop in yields is actually behind us and not in front of us. And if so, why is that, Mike?
We do. It's interesting, John. When you look at the market action over the last few weeks, especially early August after that really crummy jobs report, markets went bonkers, yields went down a ton. And if you look at the relationship between long-term yields and Fed funds pricing, it's been pretty much intact. And what it tells us is that we think that if yields were to drop down to, let's say, 350 and 10s, you probably need an extra 60 to 70 basis points of Fed easing priced in. That seems like way too big a hill to climb. So for the market to price 250 basis points of easing by the Fed next 12 months, I think that's far-fetched. So we do think the big rally's done.
Mike, do you believe this idea that the Fed should be easing by at least 100 basis points just to even remain neutral at a time when inflation is really decreasing at a rapid pace?
The Fed should cut pretty aggressively, I think. When you look at real yields, they're still very, very high. We've talked about that a bunch. A lot of your guests have over the last month or so. And that story hasn't really changed a lot. Powell's probably going to mention this on Friday. Goolsby's talked about it. Others have too. But taking real yields down fairly soon, we think that makes a lot of sense. And that suggests fairly aggressive cuts.
So how do you think that the rally is behind us? Do you basically think that the market's priced in the aggression that the hikes will take? I mean, that basically it won't get much more than this going forward?
That's right. So you look at market pricing today, plus or minus 185 basis points priced for the next year. That's quite a bit. I could see that getting bumped up to maybe 200 and change. But the idea of that going to 225 or 250, that seems pretty unlikely. I think we'll get zero out of Jay Powell on Friday. I think it's probably a good time to take a nap for most people. But when you think about the outlook, a little humor here on Monday morning, we try and get it going. But still, when you think about the data outlook, let's say early next month, you've got a lot of events in a pretty tight space. Those are going to determine what the Fed does. But the idea of getting an extra even 30 to 40 basis points priced in, I think that's really a tough thing to ask for.
Mike, I'm not going this year. Lisa's got to try and promote it, and you're not helping at all. Are we putting that in the promo?
Yeah, please, because, I'll just go canoeing. Love it. It's beautiful there. Mike, you can come with me.
You did that before, didn't you? I remember that a couple of years ago.
Yeah. I've gone canoeing. I've gone kayaking. You can't really hike by yourself. You have to get somebody who's a really companion. Because of the bears.
Yeah.
This year, I know the bears scared you away. You're like, I'm not going to be.
Bears did scare me away.
You're just a little nervous.
You should be frightened of the bears, Lisa. That's probably the sensible approach to go about life.
We have simpatico.
Yeah, okay. Mike, I want to finish up on this. I want to change the story away from Chairman Powell and his address in Jackson Hole, Wyoming, and towards what's going to take place before that, the DNC in Chicago. Mike, how are you thinking about political considerations? And if I was to ask you who the inflationary candidate is actually going to be, can you point to one versus the other at this point?
Oh, boy, that's a tough call. So when you think about the idea of inflation, I'd say for us, John, it still boils down to, do you get a sweep? So what's the chance Republican sweep versus Democrats? Probably more likely on the Republican side, given the way the Senate map works. So that would tell me that Donald Trump's probably the more inflationary candidate. As far as price controls, Kamala Harris's proposal, we could talk about that all day long. I think it's a bad idea, but still, it really lends toward Trump being more inflationary, but it's more the Senate going with him, less than Trump versus Harris per se.
Mike, how much credence do you give some of these policy proposals, which many push back and say, well, it's just rhetoric right now to get the base excited and get voters out on November 5th?
Yeah, it's pretty tough to get really ramped up about it, and I think that's why a lot of analysts and economists and people like ourselves talk about various scenarios but don't have a base case, because you simply don't know how the electoral map's going to work out. And most importantly in the U.S., do you get a sweep or not? And those are fundamental questions. And for us, that's been the main issue regarding this election for a long time. So I'd say at this point, it's a lot of, they're interesting talking points, but we don't really get too hung up on them right now.
Sounds like everyone should go on vacation, Mike. Thank you, sir. Michael Schumacher of Wells Fargo. Sleep in on Friday, skip the speech. Don't bother with the DNC. Is that the message here?
And by the way, we'll be broadcasting live from Jackson Hole. So if you want to take a nap but you want some background music, just turn it on.
Solid promo there from Mike Schumacher. You've got to use that sound now.
I think we're going to.
Yes, absolutely. Got to be honest with you.
Want to go hiking with me? We
Sure.
can scare off the bears.
I don't worry about the bears.
TK can scare off the bears. What's the line? You've just got to be, don't be the slowest. right? You just don't be the slowest.
Or you just have to, you know,
I just have to run faster than you.
Yes. That's
All
what
right.
I always felt more comfortable around Tom. He just, you know, guaranteed that you wouldn't be the slowest.
Love the way you think,
Let's get you an update on stories elsewhere with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Ernesto has re-strengthened into a Category 1 hurricane. The storm is now passing near Canada and impacting the U.S. East Coast and Canadian Atlantic coast. The National Hurricane Center said life-threatening surf and rip current conditions are likely. Ernesto is expected to weaken tomorrow. The ports of LA and Long Beach, which account for nearly a third of all U.S. container imports, are seeing a frenzy of volume. It's rivaling the highest import levels set during the pandemic. The volumes do stand in contrast to concerns over a cooling economy. Instead, though, retailers are stocking up ahead of U.S. tariffs on Chinese goods and a possible strike by American dock workers. Though there is a threat that consumer spending weakens meaningfully, leaving warehouses full and companies with too high inventories. AMD has agreed to buy ZT Systems for almost $5 billion. The deal gives AMD data center technology. It's a direct challenge to NVIDIA's AI dominance. ZT makes server computers for owners of large data centers. It's the kind of customer that's been pouring billions into new AI capabilities. NVIDIA is still by far the chip industry's leader in the AI boom, but AMD is seen as its closest rival and has been making inroads. And that's your brief, John.
Danny, thanks for that. Appreciate it. And thanks for this morning. Up next on the program, setting you up for the week ahead. And we'll head over to the DNC. You're watching Bloomberg Surveillance.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the...
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
.38 minutes away from the opening bell. Equities positive by 0.1%. Here's the calendar, the trading diary, the lineup as follows. Tuesday, we'll get results from Lowe's and Toll Brothers. Wednesday, we'll get Target, Macy's and TJX earnings before the opening bell. Later on that afternoon, 2 p.m., we'll get Fed minutes. Thursday, the Jackson Hole Economic Symposium begins. And on Friday, Fed Chair Jay Powell delivers his remarks. Turning to the other event this week, the Democratic National Convention kicking off in Chicago today. Here's your lineup for that, with President Biden set to deliver primetime remarks, followed by Minnesota Governor Tim Walz on Wednesday. And finally on Thursday, Vice President Kamala Harris scheduled to deliver her acceptance speech. Bloomberg's Katie Lyons joins us now from Chicago at the DNC. Katie, let's get into it. Walk us through not just the schedule, but what you and the team will be focused on in the week and days ahead.
Well, of course, John, it's all going to be about energy here, considering energy to this point is what really has defined Kamala Harris's still very young candidacy. Remember, it was really just roughly 4 weeks ago after Biden dropped out that she became the presumptive, and now already is, because of a virtual roll call, the official Democratic nominee. So this week very much is going to be essentially a coronation. The nomination already is locked up, so it will be a week of celebration, but specifically starting tonight, it's also going to be a week of reflection, not on Kamala Harris, but on President Biden. He is slated to speak this evening, introduced by his wife, the First Lady, Jill Biden, in what in many ways will be kind of a swan song, where yes, he's probably going to talk about his own legacy, but also be trying to make the case for the path forward, which now includes his Vice President Kamala Harris, who everyone gathered here in Chicago wants to see win the election in November. Now, something else we're watching for here in Chicago, of course, in addition to the actual slated programming and the events that everyone wants to happen, is something that a lot of organizers probably are not as excited to see happening, which is protests over the war in Gaza and the conduct of Israel during that war. There were already some protests here in Chicago yesterday when I came in, made traffic a little bit difficult. There could potentially be more disruptive protests as the week goes on, and we've already seen some protesters showing up at Kamala Harris events on the campaign trail. She's handled them in many different ways. At one point, she told protesters she was speaking. At other times, she has used that as an opportunity to call for a ceasefire in Gaza. So the way in which the protests will be disruptive, considering this is a convention in Chicago, we saw another one like that in 1968 that was also marked by protests. That is going to be creating a contrast. What's happening inside the United Center when Democrats are excited and enthusiastic about their candidate, and of course the vice presidential nominee as well, Tim Walz, but on the outside we could see a little bit more tension.
Kaylee, given those are going to be the pictures coming out of the DNC, besides all the happy talk inside the United Center, how unified is this Democratic Party?
Well, frankly, the party itself is pretty unified right now, at least when you think of the party elite and leadership, the very ones that essentially were incremental or influential in forcing Joe Biden out of the race in the first place. By and large, you do see the political glitterati, the chattering class, aligned behind the Harris-Walz campaign. That said, there are fractures evident in the Democratic Party based on the fact that there are uncommitted delegates who are on their way to this convention because of the protest vote over against Joe Biden in the Democratic primary process, which of course he won before stepping down. So there are divisions over that issue, but by and large, this is a party that has been very much energized by their new candidate, and that's showing up in polls as well. We got a slew of polls over the weekend, an ABC, Washington Post Ipsos poll that shows Harris nationally leading by about 5 points. There's been some other positive swing state polls as well from the New York Times, Siena, so all of that giving them energy heading into this week's events.
Hey, Kelly, thanks for jumping on with us this morning. Looking forward to your coverage, and hopefully we get Anne-Marie on a plane and she can be alongside you over the next couple of days. Coming up tomorrow, Sunrun CEO Mary Powell, Bob Michael of JP Morgan Asset Management, Gillette Lowe of Strategas, and Neil Dutta of Renmac. All in that and a whole lot more. From New York City, this is Bloomberg.
Final set at the Cincinnati Open. Aryna Sabalenka took out world number 1 Iga Swiatek in straight sets to punch her ticket to her first ever final in the Queen City. She'll face Jessica Pegula for the title after she came through her rain-delayed semi against Paula Badosa. The American will be looking for her second straight title on tour after successfully defending her crown in Canada last week.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Futures, little change, but in the green after 7 days in a row of gains. 30 minutes until the start of the cash trade today. I'm Matt Miller.
I'm Shonali Bassett.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, we are in waiting mode. Investors are looking ahead to Jackson Hole later this week for clues on the policy path ahead.
And we have a record offer. Couche-Tard makes a bid for the owner of 7-Eleven in what could be the largest foreign takeover of a Japanese company.
And a crucial week for the race to the White House. Harris and Trump battle for momentum and attention as the DNC kicks off in Chicago. Let's take a look at where markets are trading 30 minutes to go until the bells ring. We are in wait and see mode. You can see futures just a hair higher, following the best week of the year. The S&P 500 and the NASDAQ 100 up about 0.1%. Of course, we have earnings, we have Jackson Hole, and we have politics to look forward to. But right now, pretty much unchanged. I'm going to call that same thing, too. If you take a look at the bond market, 10-year yields just about flat, Matt.
All right, let's take a look at one of the stocks that we're watching, or actually really a currency that we're watching here. This is the yen. I've inverted it to make it easier to understand. So as the yen rises, you can see that the NASDAQ historically comes down, and the inverse is true as well. Today we have strength in the Japanese currency, but we still see green arrows on the NASDAQ. Will that hold throughout the day?
Perhaps that carry trade unwinding. Taking a look also at some individual stocks because it is a merger Monday. We are watching AMD. The company has agreed to buy server maker ZT Systems in a cash and stock transaction, and it's valued at almost $5 billion. It's going to add data center technology that will boost efforts to challenge NVIDIA, and AMD now is up about 0.8% pre-market. NVIDIA fluctuating pre-market, but now up almost 0.2%. Also watching Estee Lauder shares were sliding earlier this morning after the cosmetics company issued weaker than expected profit projections. It also said its CEO plans to retire at the end of June of 2025. Estee Lauder's, though, now still in the green, up more than 1%, Matt.
All right, we are seeing gains again really in futures today. And as I said, 7 days in a row of gains after the manic Monday that was a couple of weeks ago. It seems that investor sentiment has really bounced back.
Yeah, big time, and you can see that, of course, in the equity performance. This is a big week, though, guys. Of course, we have Jackson Hole, we have the DNC, we also have retail earnings. We've just been talking really until our faces turn blue about the state of the consumer. We're really going to see some important reports this week when you think about Target, Lowe's, TJX.
And we're talking about that merger Monday as well. You've got to think about how that keeps valuations up when you have competition in the market for deals here. We are finally seeing some activity after some tough days this summer. We're on the rebound.
Yeah, absolutely. That seems to be the story across a lot of different issues that we're going to touch on throughout this program. Joining us now at the desk to discuss how she's positioning for the week is Nadia Lovell, Senior U.S. Equity Strategist at UBS. Nadia, great to have you here in the studio with us. You know, the VIX spiked up to 65 a couple of weeks ago, and everyone told us to buckle up for, you know, more volatility to come. We're seeing it trade right now at 15. Are we going to see another bout of volatility, or is this smooth sailing until maybe the election?
Unlikely that it's smooth sailing. I mean, seasonality will start to kick in again when we get into September. I don't necessarily think that we'll get back to the spike in VIX that we saw a few weeks ago, but remaining in sort of the mid-teens, probably unlikely. Maybe we'll trend back up into sort of the 20-plus range. We typically see volatility pick up in September, October ahead of an election. And then also we'll have conference season starting right after Labor Day, and so we'll get updates from companies on the state of the consumer, the state of the economy, and overall profits. So that could cause some volatility in the market as well.
Yeah, you think about some of the potential catalysts that could get us up to the 20s again on the VIX. I mean, it's a pick your poison type of week. Jackson Hole, politics, retail earnings. When you think about sort of the cadence of this week, what are you going to be paying most attention to?
A couple of things. Of course, earnings are most important to us. You know, we want to hear what companies are saying, what pressures they're continuing to have. But then, of course, we have at the end of the week Jackson Hole, and we will want to hear from Chairman Powell and how he's interpreting the data and whether we'll start to get some smoke signals on the potential rate cut in September. Certainly, some of the committee members have been coming out, and some of the governors have been coming out, suggesting that we could start to see the cutting cycle in September, which we do believe will start.
Of Jackson Hole as well, a lot has changed since that last Fed meeting at the end of July. When you think about Jackson Hole, how much can it recalibrate what investors have now baked into the market of more than 100 basis points of rate cuts through the end of the year?
You know, we've seen that repricing come down quite a bit in the last week. You remember at one point during the height of the volatility of the last couple of weeks, the market was pricing in over 30 basis points of cuts. Now we're sort of at 95 basis points of cut. We do think that Chairman Powell is likely to push back on the market about 50 basis points of cut, simply because of the macro data of the last week is coming better. We've had retail sales. Inflation seems to be back on that disinflation path again. And so the inflation data suggests that the cutting cycle should start, and then how deep that cutting cycle will depend on the labor market. And right now, claims have come back down. All we'll be watching September 6th to see what happens on payrolls. I think that's going to determine whether we get a 50 basis points. But standing here today, in terms of the data so far, it does suggest that 25 basis points is more likely. And so Powell is likely to push back. I think we've come a far way from 2 years ago, that 8-minute speech where he said they would be paying ahead. We're 80% back to, you know, in terms of inflation target, and the economy is growing above trend. Like, wow.
Right.
Impressive.
Well, but we do expect a cutting cycle, right? At least they've prepared the market for that. What do you want to own into a reduction in the Fed funds rate?
I think you want to still continue to hone those quality names. You know, I think the market has already sort of priced in a rate cut, so it really goes back to fundamentals that are going to drive this. You have seen small cap catch a bid in terms of the expectations of rate cuts, but reality is, you know, anything more than 100 basis points would suggest that we're in a more dire situation for the economy, and that's not good for small companies. So we wouldn't necessarily lead into that trade. We would continue to lead into those secular growth stories within tech, add some cyclical exposure in terms of industrials, and maybe even a little bit of financials that, you know, could benefit from a rate cut as, you know, the cost of capital comes down.
Well, let's talk about the rest of the year, because your house view, your S&P 500 price target, 5,900. Yeah. You think about where we closed on Friday, just above 5,500. Is there any way to get to 5,900 by the end of the year without tech leadership? If you just think about the makeup of that benchmark.
I think it's going to be challenging. You don't necessarily need tech to have the same magnitude of leadership that it's had over, you know, the last several months. We think that that leadership will temper, but tech will continue to lead. We would like to see the more broad-based participation of the market, because that will help sustain this, bull market over the longer term. And you're already seeing that. You're seeing that in terms of the earnings growth that we saw in the second quarter. You're finally seeing the broadening out of the earnings. You're seeing the 493 back into the black after several quarters of contraction. But again, we think that's tech. To your point, it's just the sheer fact that it's such a large market weight in the index that tech has to be a part of that story.
Well, just to tie a bow on that point, it sounds like what you're saying is you think about that broadening out. It would be nice to see, but it sounds like a nice to have rather than to get back really into bull market mode. We need big tech.
This past year has shown us that they need to be part of the participation. I don't think that the broader market is enough to get us to that 5,900. Maybe the broader market is enough to get us to 5,600 and sort of stay there, but I think that you need tech to be a part of that.
Here's the thing. The last time we saw the jobs report, there was two words that pervaded the market that seem to have go away. That is growth scare. Yeah. And if you believe in that broadening of the market, then how much does that growth scare start to really halt a further rally?
Absolutely. If we do see a weak job market, job report again on September 6th, if we see a tick up on unemployment, you are going to get the market questioning again, is economic growth really sustainable? I mean, so far you're seeing the data coming in pretty strongly. And if you see any sort of weakness from the consumer, that broader rally is not going to be sustained. People will continue to revert back to sort of the old trades of secular winners, more quality companies. And that is, at the end of the day, that has proven to be technology companies.
All right, Nadia, great setup for a very busy week ahead. Really appreciate you taking the time on this Monday morning. That, of course, is UBS Senior U.S. Equity Strategist, Nadia Level. Meanwhile, let's take a check on futures because you have a rally extending a little bit in the market. Just in the past couple of minutes, you've seen the S&P 500 extend gains, rather, up 0.2%. Same thing, too, if you take a look at the NASDAQ 100, about 20 minutes to go into the cash trade. Let's get a check on what's moving underneath the hood. We're going to do that with Abigail Doolittle.
Well, helping these indexes rise is Google, Alphabet. The shares of Alphabet headed to a third up day in a row right now in the pre-market, up 1.6%. Some speculating that if Kamala Harris were to win in November, that it could be a way for Alphabet, Google, to wiggle out of a proposed breakup based on her legal relationships, and also the possibility that she could shake things up at the DOJ and FTC. Very speculative, but again, up 3 days in a row. That said, down more than 10% from its July peak. Fubo TV, let's take a look at this one because it is soaring, up 15 to 16%. There is a pretty big bearish short interest there, but it's jumping after the Fox Disney sports service streaming service was blocked from launching its streaming sports business late on Friday. Down 52% year-to-date into this. Let's see if the rebound can continue. And then finally, Shonali, let's take a look at Coinbase, because of course, crypto, Bitcoin, Ether under pressure, both down more than 2%. And Bitcoin looks like it's heading back down toward that $40,000 per Bitcoin or its long-term uptrend, taking the crypto space with it. Although Coinbase at this point well off the lows, down more than 1 or 2% right now, down just slightly.
Thank you so much, Abigail. Also want to bring you some breaking news because the SEC is charging Carl Icahn and Icahn Enterprises, that is ticker IEP, for failing to disclose pledges of companies' securities as collateral for billions in personal loans. Both Icahn and IEP have agreed to pay $1.5 million and $500,000 in civil penalties to settle these charges without admitting or denying the findings. Very interestingly, these go through December of 2018 to the present, and this was 51 to 82% of IEP's outstanding securities as collateral pledged to secure margin loans worth billions from various banks.
Here you see a longer-term look at the stock, and of course we knew about this in May of last year when the U.S. Attorney was seeking info on some of the units, when people started talking about short sellers, especially what these loans were backed by, and the stock took a hit then. So today's story is a continuation of what we saw last year in May.
And perhaps a closure as well.
Yeah, absolutely. All right, coming up, a big week in the race for the White House as Democrats head to Chicago to kick off their national convention. We'll be there as well. This is Bloomberg.
think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Let's get now to high interest to look at what's making headlines around the world. Chinese copper exports fell sharply in July from an all-time high as demand for the metal improved. Exports fell 40% from June, but that's still nearly double last year's level. President Biden's top diplomat, Anthony Blinken, met with Israeli President Isaac Herzog as the U.S. tries to broker a ceasefire agreement between Israel and Hamas. With the two sides blaming each other for the ongoing conflict, the chances for success look obviously pretty dim. And Chicago and its governor are in the national spotlight thanks to the Democratic National Convention that kicks off today. Governor J.B. Pritzker personally lobbied for the event for years, wooing President Biden and the DNC bid team with fancy meals and a private concert from Metallica. Biden's a Metallica fan? Did you know that?
I did not know that, but a very fun fact indeed. Now we're going to get more on the race for the White House as the Democratic National Convention gets underway, because over the weekend, Vice President Kamala Harris spoke in Pennsylvania. Here's what she had to say.
We know our country is going to be as strong as our willingness to fight for it and to fight for what we stand for. You know, when you know what you stand for, you know what to fight for.
And joining us now to break down the crucial week ahead in politics, I'm pleased to say we have Henrietta Trays. She is Economic Policy Research Director over at Veta Partners. So you take a look at the polls. They're starting to tilt in favor of Harris. You write in a recent note that basically she's polling with a national average of +1 when it comes to her lead over Trump. But is that enough to win the whole thing at this point in the race?
It's not yet, but it's getting there. And what you've seen from the data since I published that on Friday is now she's inching up. We want the average for a Democratic candidate, particularly one who's not viewed as the incumbent. In this race, Donald Trump is viewed as the incumbent, having formerly been the president, and Kamala Harris is more of the upstart candidate. You want to see, since we have to go through the swing states and the Electoral College, a situation nationally that's sort of +2, +3, +4 for the Democratic candidate, and she's not quite there yet. But what will happen this week is the DNC will take place amidst a lot of pomp and circumstance, and that historically boosts the candidates by 2 to 3 points. So by the end of, call it next week, when we have fresh data, I wouldn't be surprised if she's outside the margin of error and firmly in the range of winning this election in the polling data.
You will notice, especially if you poll voters in New York or California, that the SALT deduction cap matters, right? Trump basically punished these states by taking away their SALT deduction, and he put it into his 2017 tax cuts legislation. What are the positions of Harris and Waltz on these tax cuts and deductions?
Critical question. This is a $1.2 trillion revenue raiser from coastal blue states. So when Mitch McConnell was writing this package back in 2017, this was their #1 pay for it, and effectively paid for the bulk of the corporate tax rate cut that was permanent and the individual tax cuts and other preferences that now expire at the end of next year. My conversations with Democrats on the Ways and Means Committee, who are the ones who will be writing next year's tax bill if they win the House, run squarely through a number of seats in California and New York that are, disproportionately punished by the SALT cap. So the expectation is that Democrats next year, if they control the House and the Senate and the White House, they will allow the SALT cap of $10,000 to expire. And that means everything goes back to the way it was before 2017, and you have an unlimited deduction that does not penalize the coastal states.
Also interested about the child tax credit discussion here because both Kamala Harris as well as J.D. Vance have brought this up in discussions so far. At the end of the day, it's something fiscal conservatives hate. You've seen a lot of Republicans vote against such issues in recent past. How do both parties plan to really address here what many Democrats are calling the care economy?
Yeah, absolutely. So Kamala Harris's plan is to provide a $6,000 child tax credit. And as you know, providing tax preferences to any individuals in the code is so much more expensive than doing, for example, a corporate tax rate reduction. Each one of those points is $150 billion. On the child tax credit side, making that permanent is over $1 trillion. There's just more of us, right? So it is a very expensive component. But if you're going to take the position of the Trump-Vance ticket and say, we want people to be having children, we want to support families and have a federal government and an American strategy that promotes child birth, then providing for a child tax credit makes a lot of sense. So J.D. Vance has been on the road talking about a $5,000 credit, which would also be very expensive. But this is sort of the populist wing of the Republican Party versus the establishment wing of the Republican Party and where they diverge. In general, the populist wing of the party, the sort of Trumpian MAGA wing, is growing larger in the United States Senate, but it's still a minority. So it's going to be really difficult to pass that unless Democrats control one of the chambers of the House or Senate next year.
And I want to talk a little bit more about Harris's economic plan, her policy vision there, some of which was laid out last week. Of course, sort of that ban on corporate gouging, especially at the grocery store, got a lot of attention. And we heard from Republican Senator Lindsey Graham over the weekend on Meet the Press saying that she's going to the Soviet Union playbook to lower prices, called price control. You think about the large cohort of undecided voters that are still out there. How much currency do those types of attacks, that type of language, have with that group?
Well, it's interesting because, of course, Republicans have proposed this exact same type of ban previously. I think it was Senator Hawley, though I might be mistaken. If you're looking at specific industries in the grocery space, meatpacking, for example, you have effectively a monopoly that has allowed for price controls. And so what Kamala Harris is trying to get at is really pocketbook issues. The number one thing you hear from voters is, the price of groceries is too high and the price of gas is too high. There's not a whole lot you can do aside from trying to jawbone and discourage corporations, grocers, meat packers, et cetera, from reducing prices. So effectively what this means is that Kamala Harris, if she were president, and probably Donald Trump too, given the support that Republicans have had for the same kind of strategy in the past, to try to pull them all into the White House. This looks like sort of a press availability where they're all sitting around a big table and talking about how to bring prices down. That's sort of the strategy. There's no legislation that would pass to limit prices. That's not a realistic outcome or even something that Congress is considering. So this is more of a, using the bully pulpit of the White House to sort of jawbone companies into doing what you want.
Henrietta, I got to ask, even if J.B. Pritzker brought out Metallica, why would the Democrats decide to have their convention in Chicago? I mean, historically, seems like probably the worst idea that they've had. And especially as you've got protesters, anti-Israel protesters who are going to try their best to get Trump elected. What a disaster, right?
I mean, certainly not looking at Illinois as a swing state. And Republicans obviously went to Milwaukee for theirs. You'd wonder why it wouldn't be in Pennsylvania. But I think it maybe really speaks to how much the Democratic Party did not anticipate that Kamala Harris was going to be the presidential candidate with Tim Walz at this point. This race is now pivoted towards Georgia and North Carolina, Arizona, and Nevada, where Kamala Harris is making dramatic inroads and starting to paint a picture that looks like a combination of 2020 and 2008. So a strategy that really focuses on those states is, I think, paramount. I don't know that you need to spend all this time in sort of the Rust Belt area where Illinois is, but Pritzker did a very good job lobbying for it, and I guess Metallica works wonders.
All right, Henrietta, great to spend some time with you ahead of the DNC kickoff. That, of course, is Henrietta Trays of Veda Partners. This is Bloomberg.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
All right, it's time now for Social Climbers. The company's making waves this morning, and first up, the drug maker Sega Technologies falling today after it announced that a study of its experimental therapy to treat Mpox didn't meet its primary goal. Next up, Uber-backed e-scooter company Lime launching its service in Japan. It's the latest sign of the country's belated acceptance of the sharing economy. Lime's expansion in Japan is in contrast to slowdowns in other cities. And finally, Rocket Lab announcing that 2 Mars-bound spacecraft are on their way to Cape Canaveral, Florida, in preparation for launch. The spacecrafts are scheduled to launch to Mars sometime this fall. Of course, you can follow all the latest company buzz on TREN Go on your Bloomberg terminal, Matt.
All right, let's take a look quickly at what's going on in futures ahead of the opening bell, just about 4.5 minutes away. We still see green arrows, though very slight right now. As the yen continues to rise, that'll put some emphasis on how painful this carry trade is going to get, if there is indeed a lot of it left. And after 7 days of gains, you have to wonder when investors are going to start to take at least a little bit of profits off the table. Coming up next, Nimrit Kang joins us, CIO at North Star Asset Management. With her stock pick, she's going to give us some individual names next. This is Bloomberg.
recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
All right, we have just about 23 seconds until the start of the cash trade. It looks like we're going to see an 8th consecutive day of gains. At least we're on track for that right now. You can see futures, at least on the S&P, up a little bit less than 0.1%. We're turning lower on the NASDAQ 100. If you see the tech stocks fall, the big heavyweights, then we may see the whole S&P 500 come down as well. On the New York Stock Exchange, Israeli mapped in New York, ringing the opening bell. What do they do? Your guess is as good as mine. We can Google it. The folks at Google on the VP level are ringing the opening bell along with some content creators down at the NASDAQ. In terms of the trade right now, we're going to bounce, I'm guessing, back and forth between gains and losses. Let's get it over to Katie Greifeld to take a look at what's going on.
Well, right now we're bouncing to the upside again when you take a look at the S&P 500 and the NASDAQ 100. Of course, small gains coming off the best week of the year for the S&P 500. We'll see if it can notch an 8th straight day of wins. The Russell 2000 also getting in on the action. The Russell 2000, those small caps currently up about 0.1%. Now, one stock to keep an eye on at the open is, of course, Fubo TV, absolutely soaring after Fox, Warner Brothers Discovery, and Walt Disney were blocked by a judge from launching their streaming sports service 1 week before its rollout. Remember, Fubo TV had filed a lawsuit against the 3 companies, and shares absolutely flying right now, currently up about 20%, Shanali.
Fascinating over here too, Katie. I'm keeping an eye on AMD and NVIDIA because AMD this morning agreed to buy server maker ZT Systems in a cash and stock deal valued at $4.9 billion. It's going to add data center technology that will boost efforts to challenge NVIDIA. You did see AMD as high as 154 share pre-market, now fluctuating into the first trades. NVIDIA still down about 0.5%, Matt.
All right, we are watching Estee Lauder as well. The cosmetics company issued weaker than expected profit projections. It also said its CEO plans to retire at the end of June 2025. So keep your eye on those shares. We'll take a closer look right now with Bloomberg's Abigail Doolittle. Abby, what do you see?
Yeah, and on this news, Matt, we have a ton of volatility on an intraday basis. At the pre-market low, shares down nearly 10%. Investors really looking at that guidance for the, fiscal year 2025. We'll be taking a closer look at that in a moment. And then higher right now, down about 0.2%. And I suspect that the reason that they're higher, based on analyst commentary, it does have to do with that management shift at the end of June of 2025, as you were mentioning. CEO Fabrizio Freda planning on stepping down. As for the guidance and why the stock had been down so much, for the fiscal first quarter, that's the September quarter, looking at a very small adjusted earnings of 1 penny to 9 cents. That represents a downside from the year before. And then on the year, you can see that they're looking at sales downside of down 1% to 2%. But take a look at that adjusted earnings. This puts a tremendous amount of pressure on the other quarters. Maybe some folks a little bit skeptical as to whether or not that can happen. We'll have to be watching. We will be watching these shares all day long. But it's not just Estée Lauder reporting this week. We have a lot of retailers. TJ Maxx up 20% on the year. That Treasure Hunt, Target up just about 2%. This company, of course, has had a hard time. Folks thinking that this current quarter, or the quarter that was, that they're reporting easy comps. Macy's down about 12%. There's some transaction data suggesting that they could put up a inline quarter. And then there's Estée Lauder down 36% this year, down about 75%, Matt, from its 2022 peak. The new CEO, whoever that will turn out to be next year, a lot of work cut out for him or her.
All right, Abigail, thanks very much. Abby Doolittle talking to us about the individual stocks moving just minutes, I should say, into the trading day. Let's talk with Nimrit Kang right now, Chief Investment Officer at North Star Asset Management. Nimrit, we have seen about a 10% drawdown from peak to trough in the S&P 500 this year, but the last 8 days in a row, at least the last 7 days in a row, have been positive, and today we're looking at green arrows as well. Does that make sense to you that this volatility kind of dissipates after just a little bit of a correction?
Matt, feels like it's a little too early to call an all clear for us. So, we've gone back and looked at data going back to 1970s, and intra-year declines are pretty common occurrence. Last year, we got an intra-year decline of 10%. This year, 5%. But as we're going into a seasonally pretty weak and volatile session of the year, it feels to us that there's more volatility to come. We're going into an election year. And of course, we are also contending with geopolitical risks, both in Middle East and Russia, Ukraine, which hasn't been resolved or doesn't seem any signs of resolving anytime soon here either.
So how do you put that together into a portfolio? Because listening to you speak, it sounds pretty cautious, I have to say. And when you think about what that means at the asset allocation level and the sector allocation level, where does that leave you?
Well, we focus on what we can have a lot of certainty and conviction on. We look at stocks where we have underlying conviction on the long-term fundamentals. For example, people are getting older. Doesn't matter what happens with the economy, doesn't matter who's in the White House or not. People are getting older. So leaning into companies that have services and products to help seniors live healthy lifestyles. That's one area. Similarly, we're doing your regular portfolio management, trimming our winners and deploying into companies which have been laggards, industrials, a lot of other companies where we feel like the long-term outlook still looks very good. So those would be some of the things we're doing from the portfolio management perspective.
It's fascinating. If you look at one of the more unloved sectors that has been looking to find a bid, it is financials. I'm wondering how you scour the universe there, given that we still have a 2-10 curve, that's still inverted to the tune of about 18 basis points.
Right. Not all financials are created equal. That's the first thing we would say. But, given that backdrop, there are interesting ideas, great opportunities on a bottom-up level. One example we have for us is Eastern Bank. Eastern Bank is a stock we hold in the portfolio. And one of the reasons we like this company is it's a small regional bank in the Boston area. It's been continuing to take market share over a number of years. It's a #1 SBA lender, so an important role in the local community. They recently are merging with Cambridge Trust, so leaning into more of the private wealth franchise there. They have very strong capital adequacy ratios, good balance sheet, and have been very proactive in making sure that they reduce their dependence on wholesale funding. So that would be one of those stocks which long-term, very good outlook, will be a beneficiary as Fed drops the interest rates here.
You've picked basically a $3 or $4 billion bank, regional bank, Nimrit. I'm sure there are hundreds from which to choose across the country that could be beneficiaries of a consolidation. Is that one of your themes?
For us, the way we think about, again, there are opportunities everywhere, right? And it's how you want to parlay those into the portfolio. This is a very easy, simple to understand bank that we can see what a big purpose it has in the local community. As you said, there are plenty of choices to choose from. It's just where you focus your interest on. And this is one of those where we feel that conviction.
And anecdotally, it feels like this earnings season in particular, we're talking a lot more about the C-suite, about executive leadership than we have in earnings cycle previous. Of course, the Estee Lauder CEO announcing he'll retire later next year. But there was a really interesting story on the Bloomberg terminal last week that said of the 191 CEOs who have left companies in the Russell 2000 or 3000 rather this year, 74 were considered to be fired or forced out. That is the most at this time of the year since that data began being tracked in 2017. So when you're looking for stocks and you're doing that due diligence at the single stock level, how important is management to you right now?
Management is always very important. It's, management is who makes sure that the company executes on their long-term strategy and vision and can execute day in and day out. Very important. But we would say when we look at management, it's not just about the C-suite. It's about the whole culture of the organization. For example, you mentioned some of the CEOs taking off. It's not just about the CEO. It's about the whole team that's propelling and making that culture and driving that forward. But yeah, it's definitely something we pay a lot of attention to.
I want to ask about Sprouts Farmers Market. I had only heard of this the store fleetingly, but it's like a $10 billion market cap. How did you pick this stock, and what's the theme?
Yes. So Sprouts, we picked Sprouts because it's a great illustration of it important to build a diversified portfolio outside of the household names, outside of the Mag 7 names. Sprouts, it's a regional grocer. They focus on natural organic products. We see a long-term trends towards consumer gravitating towards natural organic groceries, having products, food items that are free from artificial ingredients. So Sprouts caters to that trend. It's very small. It's only 400 stores. It started in the southwest of the U.S., but it continues to expand and continues to bring consumers into the stores. What we like about Sprouts, Matt, is that their value proposition, similar to what we heard from Walmart, the consumer wants value for their money. And Sprouts is one of those companies that is continuing to offer that value for money, and hence, as a result, they've been able to post very good comp store sales in addition to expanding new stores. And as a result, the stock has done quite well year to date as well.
And Sprouts, of course, is one of those names that Nimrit holds at Northstar. A very deep look here at value in this market. That is Nimrit Kang of Northstar Asset Management. Thank you so very much. Now coming up, more on the shakeup at Estee Lauder as the makeup giant dramatically missed analyst expectations. We're going to have the latest on that next. This is Bloomberg.
People, I think, from Homeland Security and or the CIA or NSA have gone to Capitol Hill and said that TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements, and TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Every weekday, only on Bloomberg Television. Context changes everything.
This is Bloomberg Open Interest. Quick check on the stocks right now and the indexes. We do see gains on the S&P, pretty solid, 0.2%. The NASDAQ pretty much unchanged right now, and the small caps are gaining about double what we see on the large caps. Katie?
All right, it's time now for top calls. Some of the analyst action in focus this morning. And first up, Piper Sandler says that Shake Shack is no longer a buy. The firm downgrading it to neutral as it tempers its view on the fast casual dining space. The analyst says he's not necessarily negative on the stock, but he sees challenges ahead when it comes to the company's prices. Piper also out with a downgrade for Dutch Brothers and Sweetgreen this morning. Next up, RBC Capital Markets says that Gates Industrial is a buy. The firm sees the potential for increased margins for the power transmission company and says there's opportunities for Gates when it comes to being a water pump supplier to data center liquid cooling systems. And finally, Morgan Stanley telling investors that HP, not a buy. The firm downgrading the hardware company to a hold, citing limited valuation upside. HP, of course, reports earnings next week, Matt.
We're very much looking forward to that, Katie. Thanks very much. One other stock that we're watching this morning is Estée Lauder, the cosmetics giant falling after issuing a weaker than expected outlook for next year. The company also announcing CEO Fabrizio Freda will retire next year. Joining us to talk more about this is Bloomberg Consumer Goods reporter Dasha Afanasieva. And Dasha, this is a stock that's been really volatile on the day. Also one of the biggest cosmetics makers in the world, although L'Oreal is far larger. We were just looking at the market caps here. What does the miss mean to you?
It means that, this was the quarter where Estée Lauder was supposed to really turn things around. They had a recovery plan that they launched in November, and it was supposed to bear fruit, and analysts expected a pretty decent increase in revenue this quarter. Instead, this massive downgrade has been issued for the next quarter as well, which just throws into question the efficacy of the whole plan. And to boot, we'll have a new CEO that they still haven't found. Fred is going to resign and step down in the next 12 months, and they're going to have someone new. We don't know who that is. The CFO, the long-standing CFO, is also stepping down. So there's all of this change, and in the midst of it, a turnaround that isn't quite gathering pace in the way that it should.
And to be fair, while shares have risen really, really meaningfully under Freda, they've still been down almost 36% this year. And if you think about that turnaround plan that you were talking about earlier this year, with that added uncertainty about who a new CEO would be, what is the expectation here for how fast they have to find somebody and execute a new plan for Wall Street here?
I think they have to bring someone in really quickly because there's all of these things that we just talked about. But on top of that, there's external factors that are actually pressuring L'Oreal as well. There's a slowdown in China. The US consumer has been looking pretty weak. And so they're contending with a lot of external and internal factors. And in the meantime, corporate governance is tricky at Estée Lauder. The Lauder family has a 38% stake, but almost all of the voting shares, and William Lauder remains chairman, and that's an executive chairman role, which means that he still has a huge amount of influence. So I think to get Wall Street's confidence after this change, after having the same people in place at the top for 15 years, they really have to move quickly and decisively and show results.
Yeah, big time, of course. A lot of work cut out for whoever the next CEO may be. Estée Lauder shares currently down about 2% intraday right now. Our thanks, of course, to Bloomberg's Dasha Afanasieva. Now, coming up, supersize this Slurpee. Canadian company Couche-Tard making a bid for the owner of 7-Eleven stores. Couche-Tard. I've been working on
Circle
that.
K owner.
All right. I wasn't supposed to do this tease. In any case, it may be the biggest foreign takeover of a Japanese company. More on that next. This is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
This is Bloomberg Open Interest. Let's take a look at the stock market. About 20 minutes into the Monday trading day, you can see the S&P 500 sitting on gains of about 0.2%. This would be an 8th straight day of gains if it holds. We haven't seen that since November 2023, so keep your eyes peeled there. The NASDAQ 100 also up, but a little bit less, and small caps leading the way right now, Shonali. The Russell 2000 up 0.4%.
Good day for those small and mid caps once again. We're going to switch gears, talk about Merger Monday, a massive deal on the horizon. Circle K operator Couche-Tard making a bid to take over rival and 7-Eleven owner 7&I. This deal would be the biggest foreign takeover of a Japanese company. 7&I has come under pressure from activist fund Value Act. And fun facts, guys, there have been actually a record number of activist campaigns in Asia, with Japan passing the entirety of 2023 in just the first half of this year. That is a record numbers of campaigns in Japan. There have been more than 24 campaigns this year there, as the company tries to become more shareholder friendly. Much of the activist activity is from local activists, but Value Act is is a notable outsider. ValueAct, of course, with two co-CEOs really pushing into Japan at a greater rate. Fun fact also, Seven and I used to be also owned by Third Point, which is how the current CEO got here. We don't yet know how ValueAct is going to react to this takeover offer, but we're going to talk about it more with Bloomberg's deals reporter, Crystal C. Because one major outstanding question about this merger is, will Japan let it happen when we know that their foreign trade ministry here has been looking to make the country more shareholder friendly? Is a deal shareholder friendly?
Well, the really big challenge here is whether this deal would get antitrust. And we're not just looking at the Japanese authorities. We should remember that there are a lot of 7-Eleven stores in the U.S. as well. So it's also subject to U.S. antitrust. And we all know that U.S. antitrust has been extremely challenging, especially when anything that has a retail footprint. Looking at Albertsons, Kroger, it's been years in the making and it still hasn't gone through. In this regulatory climate, I think this is the biggest thing that any investors will look at. And obviously, whether it delivers shareholder value, whether that synergy is going to make sense, that's always going to be something that investors focus on. But the feasibility of it really lies on the antitrust element.
Where are the majority of these stores? I mean, we think of 7-Eleven as a U.S. company. Nobody ever thinks of the slushie as a Japanese invention, but obviously it's been in Japanese ownership and Japanese hands for a long time now. So where are these assets?
So if you remember, 7 & I actually had made a move to acquire a bunch of Speedway gas stations. And a lot of the stores actually are across the U.S., not just in cities like New York. You have a lot of suburban gas stations. And that was also a very challenging situation, a very challenging antitrust environment there as well. So it's all in all, I think U.S. is actually going to be the biggest challenge. And Couche-Tard is based in Canada. So you kind of it's a really global operation that you're kind of inviting scrutiny from practically everywhere.
Crystal, you cover activists very closely here, and ValueAct has been in this stock for a while now. How do you think that this deal plays into what they ultimately want from the company?
So ValueAct actually ran a proxy campaign last year, and it was unsuccessful to get on the board. A lot of people in the activism world like to mention how it is really difficult to run an activism campaign in Japan because of the cultural differences. There are a lot of retail shareholders in Japanese stocks, and they tend to support the management. So for an outsider to come in, you have to have a very different approach. But that said, like you were just mentioning before the segment, the Japanese activism volume has really taken off. I think largely because of the stock performance as well as the yen being really depreciated. So it's still a lot of opportunity there. ValueAct hasn't come out with a statement on the 7 & I news, but we should expect them to have an opinion on this.
And Crystal, we have just about a minute left with you, but I want to talk about broader M&A here because, of course, we have this deal. Last week, we were discussing with you, of course, Mars agreeing to buy Kellanova, for example. And it's interesting that you've seen this summer really heat up when it comes to the M&A world because in just a couple of months, we have a U.S. election. So when you think about the course of the remainder of the year, would you expect momentum to build, or is this sort of the last rush?
The deal maker kind of are in two camps. On one hand, you have people who are like potentially optimistic that says things are going to continue, election isn't that big of a factor. But like we had just talked about, antitrust being such a big element and such a big influence in any kind of deal making these days, it's really hard to discount that. We could probably see things getting out by maybe September. And from then on, it's really getting perhaps too close to the election. But then you're also seeing that this particular situation, it mainly isn't U.S. focused. It's a Canada-Japanese deal. So international deal making will continue. So the world kind of goes on, the M&A world goes on, even when the U.S. election is still going.
Crystal, great to check in with you. Thanks so much for joining us. Crystal C. talking to us about Couche-Tard and 7 & I, as well as the broader M&A picture. Let's get to your trading diary. What you need to be watching this week, the DNC begins today in Chicago. We'll go there. Then tomorrow we get another read on the consumer with Lowe's earnings. On Wednesday, more retailers, Macy's, Target, and TJX all report. Plus we get Fed minutes. We round out the week with Fed Chair Jerome Powell speaking on Friday at Jackson Hole. This is Bloomberg.
Liquidity is the lifeblood of an airline. We make very conservative decision-making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well, because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast, and that's where you will find us. Alex Steele is out today, and just to show you how important Alex Steele is, we need two people to come in and cover for Alex Steele. In the first hour, Mike Regan, Bloomberg editor from Bloomberg News, and then this guy, Matt Miller, supposedly coming in at 11 o'clock. I'll believe it when I see it, but we'll have some good stuff there. Jody Schneider is going to join us. She's in Detroit. I mean, she's in Chicago right now for the Democratic National Convention. She's our politics leader. She'll kind of give us a sense of a little preview of what we're going to get from the Democrats in Chicago. We're also going to talk to some folks on the market. Bobby Ghosh is going to join us, talk to us about Israel, Hamas. Is there any peace coming in that troubled part of the world? So all that's coming up in the first hour. Let's kick it all off. Lisa Mateo and get a Bloomberg Business Flash, Lisa.
You got it. And Market Driver is brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest at ibkr.com/RIA. All right, we've got a mix of green and red. Just changed back to green on the screen following Wall Street's best week since November. Now, investors really focused on Jackson Hole, Wyoming. Fed Chair Jay Powell set to speak on Friday. Meanwhile, we had the Fed's Mary Daly told the Financial Times she has more confidence that inflation is under control. Neil Kashkari tells the Wall Street Journal he would be open to a September rate cut on a weaker jobs market. So right now we have the NASDAQ, little change, up about 5 points, 17,636. We have the Dow up 0.2%, 114 points at 40,770. The S&P 500 up 0.1%, 4 points, 5,559. Over to the bond market, the 2-year yield 4.05%. That's little change. The yield on the 10-year 3.87%. 1%, and that is little change. Commodities, oil declined for the fourth time in 5 sessions. Right now we have Brent crude $79 a barrel, WTI crude $76 a barrel, COMEX gold lower, $2,533 an ounce. Some economic data just coming out a few moments ago. Conference Board leading economic index, well, it fell 0.6% in July. The survey was falling for 0.4%. The prior was a drop off about 0.2%. That is your Bloomberg Business Flash. Paul and Michael.
All right, Lisa Mateo, thank you so much. We appreciate it. Michael Regan sitting in for Alex Steele. Paul Sweeney, I'm live. We are live here in our Bloomberg Interactive Broker Studio. I'll bring it to you. Mike Regan, thanks so much for joining us here today. I wanted to ask you, now that we've got 2 weeks of hindsight, what happened 2 weeks ago today in the markets when kaplooey? What did you guys write about that?
Paul, I think for one thing, you always have to step back and say, okay, it's August. August is a time, low liquidity, people on vacation. I don't know. I've been working here at Bloomberg for, 3,000 years now. And I think at least 2,000 Augusts, I've seen something similar to this. So I think that's the first thing you have to realize going into August. Then you had the carry trade unwind. I mean, clearly some collateral damage from that. But look, now we're back. What are we, about 2% back from where we were before it all started? So it's almost like a bad nightmare.
It's amazing how the markets kind of stabilized after that. Really a crazy trading day on that 2 weeks ago Monday.
Yeah.
So here we are today. We got again red and green on the screen here. The S&P up about 5 points, the Dow up about 100 points, Nasdaq off just slightly. Nora Melinda joins us. She covers all these equity markets for Bloomberg News. Nora, what are you looking at today?
Well, there's a few names that I'm keeping an eye on, and one of them is Estee Lauder. Looking in the beauty space, we're seeing shares of Estee Lauder lower. It has paired a bit, that drop, but it earlier fell as much as 2.5%. Now, this is news coming after the fact that its CEO, Frida, will be retiring in 2025, and its turnaround strategy has not really been paying off. This was really the quarter where analysts and investors were waiting to see results that impressed, and that's not what they got out of this report. They released a plan back in November that they really wanted a recovery story here, and that's what people were really anticipating, but they weren't able to see it through, and so you are seeing the stock being a bit punished today after this news, especially as they're looking toward who the next CEO may be, especially since this was a long-term CEO that we've had here, and then also the CFO will be stepping down as well, so lots that they're grappling with here as we're looking toward the future.
A bit of a China story there too, right? Estee Lauder's very exposed to China. There's been so much focus on the Chinese consumer. How big of a deal was that in this quarter?
That's definitely something that's been in focus, especially as I've been reading through analyst notes. The exposure to China has really been something that a lot of companies have been really having to work with and see what they're able to do in terms of being able to really get some more traction there. So that is something that's really been a weight on this company as well here.
Yeah. EL is the ticker. I'm looking at the stock here. It's pretty much unchanged today, but down 35% year to date. So that turnaround plan, it's not working with, at least with
not working out right now.
All right, how about Advanced Micro Devices, AMD?
Yes, so AMD, we're seeing those shares climbing as much as 2.5%. Now, this is after the chip maker agreed to buy server maker ZT Systems. Now, this is a cash and stock transaction that's valued just shy of $5 billion. And adding this data center technology should hopefully bolster its efforts to challenge NVIDIA, who we know we'll be hearing from soon. And of course, a lot of the conversation has been around the AI game and how people can really stand out and how companies can really show their strength in this time period. So this is a really good move for AMD here, and people are looking to see how well this will pay off, especially as they're really looking to put themselves and set themselves apart from their competitors like NVIDIA.
Yeah, not a household name, Paul, but I did, reading the story, realize ZT Systems based in Secaucus, New Jersey?
Yes, and I actually know a young fellow who works there. Yeah. He came right out of Lafayette, one of those engineering geeks, computer science. It seems like a cool company, but yeah, based in Secaucus, and that's a big price tag for this, again, the tech capital of New Jersey. Secaucus, I guess.
That's right, where I'm usually waking up on the train on the way in.
Exactly. All right, what is Liquidia?
Yes, so this is very niche. It's a biotech company. It develops micro and nanoparticles for the delivery of biological and small molecule therapeutics.
Oh boy.
Sounds like a whole nother language to me here. But as we're looking at the shares, this company is seeing a nasty drop. It's the worst day ever on record, and it's seeing its lowest intraday level for this year. And this is coming after the drug maker said that the FDA postponed until 2025 the final approval of its inhalation powder that is used to treat adults with pulmonary diseases. And of course, when we think about these biotech names, it's really important that they get these types of approval from the FDA. And we actually had Needham analysts saying this delay was a curveball scenario that they were not anticipating. So we are seeing shares down pretty substantially, slumping as much as 42% today.
Wow.
Yeah,
and it's only, what, 10 a.m.?
Yeah, it's just, I tell you, these biotech stocks, boy, I mean,
it's so risky, right? You wake up,
it's
wake
binary.
up
It
to a
seems
40.
like it's binary. It's either up 100% or you get a bad FDA approval and you're down 40%.
Yeah.
It's such a tough way. And that's why you see like a lot of these insider trading situations with hedge funds, they oftentimes deal with these biotech stocks because that's where you can make some serious moves in the stock based upon FDA studies.
Right. And those options are probably going crazy as well.
Yep.
So
I imagine
really
so.
Fascinating one for like you said, Paul, it's a company I hadn't heard of either. So thanks for
Had to do some research.
All right,
thanks for
Norma
that.
Linda, thank you so much for that. Norma Linda, she covers all the equity markets for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Let's head out to Chicago. The Democratic National Convention, that kicks off today. President Biden speaking this evening. I believe Vice President Harris was scheduled to speak Thursday. Jody Schneider's there as well. She should be. Why? Because she's our political news director for Bloomberg Television and Radio, and she joins us. Jody, it feels like the Democratic Party and Vice President Harris continues to ride this wave. I don't know if it's a little bit of a honeymoon here, but the positive mo seems pretty solid at this point. What do you expect coming out of Chicago?
Yeah, candidates typically, Paul, get a campaign boost from a convention, the convention boost afterwards, because they have a week of, everyone saying how terrific it is and how great they are and all the wonderful things they'll do. Kamala Harris has had a little bit of that, as you note, the past few weeks. It's only been a month since Joe Biden announced he would step down from the race, and Democrats pulled together pretty quickly, both in terms of enthusiasm, support for her campaign, and money. She's raised a lot of money so far, including a lot from first-time donors. So there's all of that, kind of that good wind at her back heading into this convention week. At the same time, Donald Trump is trying to make it not a typical kind of convention week for her. The opposing candidate whose convention it is not, kind of stays home, does maybe a little bit of interviews. Donald Trump is having none of that. He is hitting swing states, 4 swing states this week, is going to the U.S.-Mexico border, where, of course, because border issues are a vulnerability for the Harris campaign. And he's going to do some sit-down interviews with some friendly outlets to him. So he's going to barnstorm this week while the Democratic convention is going on.
Jody, I saw a list of the speakers for the DNC, and it's sort of the usual Democratic luminaries that you would expect. However, there's been a lot of sort of speculation that we might see some star power unveiled at this DNC. A Taylor Swift or a Beyonce. Is there any hints you can give to us whether we might see something like that this week?
Well, I think some of this may have been, speculation on the part of Swifties who would love nothing better than to see Taylor Swift here. But yeah, often the Democrats do pull out some celebrities. We are expecting people like, George Clooney and others who typically rally for Democrats to be here at some point. But obviously Taylor Swift or Beyonce would be quite something and would really help Harris with those younger voters, which is what they need. This is really going to be a turnout election. Can they turn out not just their base, but can the Democrats in particular kind of try to remake that former Obama coalition? That's what they need.
All right, Jody, thank you so much for joining us. Jody Schneider, political news director for Bloomberg Television and Radio. She is in Chicago at the convention. We'll be checking in with her this week. All right, let's switch gears to the Middle East. The conflict continues. Secretary of State Blinken is there, hoping to negotiate some type of ceasefire. I'm just not sure where we are here. That's why we turn to people who know what's going on. Bobby Ghosh is one of those folks. Bloomberg News senior editor joins us here in our Bloomberg Interactive Broker studio. Bobby, is there any reasonable expectation that we can get a ceasefire in that part of the world and maybe try to move forward here, or is that just not on the table yet?
Well, the Biden administration is trying very hard to get one. This is Blinken's 9th or 10th trip to the region since the 7th of October last year. And the language he's using this time suggests a kind of desperation. He said overnight that this was the best and last hope for a deal that would lead to a ceasefire and the release of the Israeli hostages. Now, to suggest that this is a final opportunity, that's very strong language in the realm of diplomatese.
Yep.
And it suggests a degree of frustration. I can understand why he would use language like that. He's trying to get the two parties, Hamas and the Israelis, to focus and try to move the needle, even just a little bit. But the risk is, when you've used language like that, is that if you come home empty-handed, then where do you go next? When you've already decided and declared that this was the last best hope, then where do you go after that?
Right. Bobby, do you have any sense of sort of what the impediments are, what the sticking points are that are sort of blocking the way to a ceasefire?
Well, so the reporting from both from Egypt and Qatar, the mediators, as well as from the Biden administration here in Washington, is that both sides are making unreasonable demands. In public, the Biden administration is mostly blaming Hamas. In private, they are giving sort of quiet readouts to journalists in Washington, suggesting that Bibi Netanyahu, the Israeli prime minister, is mainly to blame, that he's putting up unreasonable demands. Both sides are fingering each other. That's to be expected. I think what it's turning on is what kind of presence the Israeli armed forces will have in Gaza once the ceasefire goes into effect, should that happen. Israel insists that it should continue to guard and patrol the perimeter between Gaza and Egypt, as well as a road that cuts right through the center of Gaza. Israel says it needs to do this in order to make sure that Gazans, as they head back to their crumbled homes and cities, are not taking weapons with them, and that Hamas is not using this movement of people to try and re-infiltrate places from which they've been kicked out. That's the Israeli position. Netanyahu says that Hamas is asking for more and more. There's also uncertainty over exactly how many hostages should be released over what period of time, first phase, second phase, third phase. But the trouble is that while all of this takes place, this kind of nitpicking goes on, we're talking about a Middle East that is on hair trigger's edge. You have Iran threatening to retaliate for the assassination of a top Hamas leader in Tehran a few weeks ago. You have Hezbollah saying that it too wants revenge for the killing of a top Hezbollah commander by Israel in Beirut. So it's not just a tripartite situation with the United States trying to get Hamas and the Israelis together. The whole region is basically on knife's edge.
Do the Gazan people still support the Hamas?
We can't know that. We just can't know that because this is obviously a group of people who have been traumatized by the events ever since the Israeli retaliation for the October 7 terrorist attack began. People have seen their homes destroyed, 40,000 people killed out of a fairly small population. I don't think this is a particularly good time to conduct a poll among, and by the way, it's impossible to conduct. It has been for many years impossible to conduct a real poll among Gazans because they live in fear of Hamas. They know that if they speak out against Hamas, if God forbid if word should get out into Hamas ears that you expressed an opinion against Hamas, well, death or destruction of your property, such as it is, or sort of harm to your loved ones is what will result. So these are people who live in fear. have been living in fear of Hamas for many years, and currently they've been enduring a trauma of their tiny little strip of land being completely destroyed. So it's really, really hard to know how much they support Hamas.
Yeah, I guess apparently maybe for this Biden administration, perhaps the last, meaningful achievement they can be gunning for. So we'll have to see how that plays out. Bobby Ghosh, thank you so much for joining us. As always, Bobby Ghosh, he's the senior editor for Bloomberg News, really an informed voice on a lot of difficult issues in that part of the world. Hopefully they can get something done there. Looking at the markets right here, the S&P 500, it's up 4 points. Not a lot of movement. Obviously, the Dow's up about 80 points. NASDAQ off 14 points. So not a lot of movement at the index level. Yields, 10-year Treasury, it's pretty much unchanged today, 3.88%. You can still get just above 4% on your 10-year. Bitcoin off 2.7%, 58,200 on that cryptocurrency. We call it out. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Bloomberg Interactive Broker Studio. I'm Lisa Mateo. We've got a mix of red and green on the screen. Traders awaiting signs of the scope of potential interest rate cuts from the Federal Reserve. So right now we have the NASDAQ down about 0.1%, 17 points, 17,612. The Dow up 0.2%, 92 points, 40,752. And the S&P 500, little change, up about 2 points, 5,557. We head over to the two-year yield, 4.07%, up 1 basis point. The yield on the 10-year, 3.88%, and that's little changed. To currencies, U.S. dollar traded at its weakest level since March. Right now, we'll check in with the Japanese yen, up 0.7%, 146.55 against the dollar. We have the euro, British pound stronger. Bitcoin down about 2.5% at 58,000. Goldman Sachs changing its tune. The economists there, well, they lowered the probability of a U.S. recession in the next year to 20% from 25%. That was after last week's jobless claims and retail sales data. And speaking of retail, tomorrow, Lowe's will open its books. We have Target, Macy's, TJX companies on Wednesday. That is your Bloomberg Business Flash. Paul and Michael.
All right, very good. Lisa Mateo, thank you so much. We got Michael Regan doing his best sitting in for Alex Steele. I mean, you know, you're trying.
Yeah, the pressure's
Alex
on,
Steele.
huh?
I mean, it's Alex Steele, big shoes. We're here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so head over to that internet thing, youtube.com, and search Bloomberg Podcast, and that's where you'll find us. We have a seasoned professional, like a trader, investor, like a person who does this stuff for a living, in studio. Frank Moncom, Senior Portfolio Manager, and Timo in our Bloomberg Interactive Broker Studio. Frank, what are you doing in this market? Where do you see opportunities today? I mean, I got the Feds going out to Wyoming or something, and they're going to have some economists out there.
Yeah.
How are you approaching this market these days?
Well, thanks, guys. First of all, thanks for having me on today. You know, I think that the Fed here is probably getting everything it needs here to be able to pivot a little bit into the easing cycle. What we're looking at is just trying to be mindful of the volatility that's still plaguing markets here. I mean, we get into this Jackson Hole meeting at the end of the week with a Fed that's basically going to look at, you know, what's going on with financial conditions, right? Obviously, we know the September rate cut is not baked in, and for obvious reasons, inflation's come down. We've seen a deceleration in growth. You know, we had a little bit of an NFP scare here, but you know, we gotta remind ourselves that this market has been super volatile in terms of pricing. You know, the easing cycle. We went from 7 cuts in the first quarter to about 3.5. I mean, it was 5.5 2 weeks ago. You know, I think one thing I really want to watch is the Fed is really not going to, you know, come out with anything real decisive as far as the pace of rate cuts between now and the end of the year. But it's mostly the tone with which they describe the current environment. So what I want to keep my eyes on really is what they're going to say about financial conditions easing and then potentially our star, right? And you know, it's really one of those things where, in terms of what we're seeing in the markets and how we should be positioning with this Fed meeting and also the DNC, right?
Yeah,
there's a couple of volatile catalysts that are on deck kind of this week. It's really to think about the fact that we're at a very illiquid, you know, market right now. I was joking with friends over the weekend saying, you know, liquidity has migrated away from capital markets into rosé and Chardonnay at this time of year. That's typical. So, you know, the NFP print for August is going to be very critical. My view in this market is that the way that we've seen the VIX kind of retrace so quickly, to me, is not really a sign of a healthy market. So I continue to want to be watchful of volatility ahead of us with the election cycle, with a geopolitical cycle. And I think with the VIX having collapsed basically from 65 to about sub 15 today, I think it's an opportunity to look for some downside protection again as we get into the fall.
You know, Frank, you mentioned that sort of typical August liquidity problem that we've run into a million times before. Paul and I were talking about it before. Is that the main story of that correction we saw from, you know, the first half of August, that in the carry trade? Was there anything else more there, do you think? You know, we're back almost to where we were before that really nasty sell-off.
Yeah, I think definitely, I mean, it had to do with it, but I also think that, you know, I've been on the record saying that, you know, protection was really, really cheap. I thought volatility was cheap. I thought, you know, skew was really cheap. It did materialize. It was short-lived, but it did materialize. But to your point, I think there's also the fact that the market is really overextending to the upside in terms of positioning, right? I mean, positioning was super overstretched. not just for the broader market, but also for within the mega cap tech sector. And whenever you get to these levels, even with a bullish market, you're kind of due for a bit of a correction. And it's funny when a market is really overextended on technicals, which was the case because positioning is a technical indicator. All it takes is just one little technical glitch to happen for things to unravel. And I think that's what took place. In addition to obviously the JPY carry unwind, and also just the SOM rule has been triggered for a lot of algos out there that trade around these types of signals. I mean, all these things kind of all happen at the same time, and in a period of time where liquidity is very thin. So I think it made a lot of sense for the market to pull back the way it did.
How about on the commodities? I mean, a lot of people just say buy gold and short everything else. What I mean, Mike McGlone, I'm quoting him.
Yeah, sure.
He's our
know
guy.
Mike's a friend. It's hard to disagree with that, right?
Yep.
I mean, when you look at the commodities complex where we are right now, when you look at things like oil and copper, you're still getting a lot of mixed signals. Take the case of oil, for instance. We've stayed into this range on, let's use Brent as a benchmark, between $75 and $90 a barrel. And you can clearly see that it's a range that's been basically kept intact because you've got offsetting catalysts. So it's a market that's really hard to read. On the one side, you don't really want to short it because there's a secular shortage of investment in crude and all that stuff. But the cyclical is really fairly bearish, to be honest with you. And OPEC now, the OPEC put to me is getting softer and softer and moving lower and lower. I think the Saudis need cash. I mean, there's a little bit of a fiscal distress in Saudis right now. I mean, they've only run a fiscal surplus. One out of the last 10 years says a lot. So for them now, it's no longer trying to fight, the flat price as much as they used to. But when we look at a market like gold, it's really all stars, being aligned. I think there's additional momentum here with central banks continue to buy. The Chinese, I'm hearing, are kind of looking for a little bit of a pullback, 10 to 15% to probably add more. The PBOC, that is, which is the main buyer in this market. So gold looks really, really good. The only thing there, it's slightly overextended to the upside, but there could be momentum there. So I think the strategy really in commodities is I would want to ride this momentum and potentially keep some dry powder on the side to add on dips. And also just continue to look for relative value dislocations within commodities. Oil versus gold, as in bullish gold, kind of bearish oil. Yeah. These kind of RB plays, and gold versus copper also. Yeah, so I think oil gold here is the main game in town, and the way to play really is to perhaps look for dips and look for RV plays versus other commodities.
Yeah, Frank, to get back to the Fed for a minute, I'm looking at our world interest rate probability function. It basically just susses out how many interest rate cuts the Fed funds futures traders are expecting. Yes. It's looking at like 3.5, maybe almost 4 cuts.
Yeah, 3.8 as of this morning, yeah.
Yeah, by the end of, and we only have 3 meetings coming up, so that's even people are thinking we'll get a 50 basis points at one of them, I guess. But what's the risk there? I mean, is the market in Fed funds futures just bracing for more bad eco news? And is there, a risk one way or the other that they'll get this wrong?
Yeah, I thought 5.5 cuts 2 weeks ago was overstretched. In fact, we kind of took the other side of that, which has worked out so far. I mean, we're down to 3.8. That's roughly almost 4 cuts between now and the end of the year. I think the real wager here is around the August jobs data, right? If we were to break the 100K jobs mark and the unemployment rate to tick up maybe to 4.4% or 4.5%, then I think, there's a chance that we could get a 50 basis point cut in September. And I think what the market is really getting at here is that if we get 50 in September, we're probably going to get 50 on the next one because the Fed then realizes that maybe it's a little bit behind the curve. So I think this whole wager is around this August NFP, which my my view on that is based on the seasonality of the data. I think the July print could easily have been a bit of an outlier here because of seasonality.
Right.
So
there's
I think
that hurricane in Houston too.
Correct.
Yeah.
Correct. And then some of the heat waves. There's been a lot of activities being canceled during the summer because of heat waves in a couple of states. So that's all playing into that. So I think it's one of those things where it could be kind of almost binary, where we either get the 50-50-25, which gets you to the what WIRP's is WIRP is pricing right now, or we might even get to the point where we only get 1 or 2 cuts, right? It could be one of those things where it's kind of if we realize July was a blip, then we might get a one and done. Where the Fed just makes an adjustment cuts, because I think this thing is super telegraphed. They can't really backtrack on the September cut. I think it will spook markets, which is not what the Fed wants to do. So I think it might just deliver a 25 and kind of wait and see post-election. If we get a strong or decent NFP, in early September.
So no taking off on the Friday's payroll day.
No, I'm in. I'm in, baby.
No,
All right.
no summer Fridays are over.
No,
Is that what
exactly.
I'm hearing, Frank?
For me, yeah. All right, Frank, thanks so much for joining us. Frank Moncom, he's a senior portfolio manager in Antimo. If this whole money management thing doesn't work out for you, you got a voice for radio. I mean, that's incredible. I just told my producer, let's get this guy in. Frank Moncom, senior portfolio manager in Antimo in our Bloomberg Interactive Broker studio. We appreciate getting some of his time. There's a little bit of green on the screen here today. I'm not going to oversell it. We got the S&P up about 13 points, Dow up 150, NASDAQ up about 30. Yields, 10-year Treasury. How about that? 3.87, 4.05 on the 2-year. We're going to have more coming up. But right now, with our news in New York City, Mr. Michael Barr.
Thank you very much, Paul, Michael, and Lisa. This is a crucial week in the presidential race. The Democratic National Convention gets underway today in Chicago. We get more with Bloomberg's Kaylee Lines.
This week very much is going to be essentially a coronation. The nomination already is locked up, so it will be a week of celebration, but specifically starting tonight, it's also going to be a week of reflection, not on Kamala Harris, but on President Biden. He is slated to speak this evening, introduced by his wife, the First Lady, Jill Biden, in what in many ways will be kind of a swan song, where, yes, he's probably going to talk about his own legacy, but also be trying to make the case for the path forward, which now includes his Vice President Kamala Harris, who everyone gathered here in Chicago wants to see win the election in November.
Bloomberg's Kaylee Lines. Meanwhile, former President Donald Trump is planning an aggressive schedule that will see him visit the U.S.-Mexico border, hold rallies in 4 King swing states, and sit for a series of interviews. America's top diplomat is on his 9th trip to Israel since the October 7th attacks. Secretary Blinken meeting with Prime Minister Netanyahu for more than an hour so far this morning. Blinken on the Gaza ceasefire talks.
This is a decisive moment, probably the best, maybe the last opportunity to get the hostages home, to get a ceasefire, and to put everyone on a better path to enduring peace and security.
Secretary Blinken also met with Israeli President Isaac Herzog this morning. Finally, Phil Donahue, a former TV host who pioneered the daytime issue-oriented talk show, died. Donahue's family said in a statement to NBC News that he passed away at home surrounded by his family, including his wife, Marlo Thomas. Donahue was 88 years old. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen. This is ahead of a big week for the Fed as all eyes turn to Jackson Hole right now. We have the Dow leading the gains, up about 0.4%, 161 points. The S&P 500 up 0.2%, 12 points. The Nasdaq little changed, up about 10 points. We have the 2-year yield at 4.06%, up 1 basis point. The yield on the 10-year 3.87%, and that is little change. We have spot gold lower, 2,504 an ounce. We have Brent crude, $79 a barrel. WTI crude, $76 a barrel. To currencies, we have the dollar weaker. Japanese yen up about 0.9% at 146.32 against the dollar. The euro, British pound stronger. Bitcoin down about 2.5%.